Minor market moves on a potentially major day. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostic.
And I'm Katie Greifeld. Kicking off to the closing bell here in the U.S., you take a look at the equity markets right now. Not too much going on. You take a look at the S&P 500. We did manage to flip into the green, currently up about 0.4%, slightly higher when you take a look at big tech and the NASDAQ 100, up by about 0.6%. Really feels like a holding pattern until we get to CPI, of course, tomorrow morning, though. Those numbers coming at 8:30. Then you take a look at the bond market. 10-year yields, they're only higher by about 2 basis points, 1 to 2 basis points. We did get an auction at 1 p.m. that tailed slightly, and you're seeing that come through. Yields had been lower on the day, now higher. But again, very small moves, all things considered. And I did want to take a look at the VIX here. Not too much going on. We're below 13 when it comes to the VIX. Not a ton of volatility in this market right now, Romaine.
All right, well, Katie, as I'm sure you know, the markets are on edge, waiting for that big announcement about CPI. That inflation data from the U.S. government set to drop tomorrow morning, 8:30 a.m. Washington time. Economists surveyed by Bloomberg expecting that report to show the headline consumer price index growing at a faster rate in December than in November. But keep in mind, core CPI should have held right around where it's been hovering for the past few months. And on a year-over-year basis, inflation continues to slow. Our team over at Bloomberg Economics says overall the report should add to Fed confidence that disinflation is making encouraging progress. Of course, the market is waiting on that. I jest a little bit because, of course, the other big announcement could potentially come today here. We are going to do a second take today on that long-anticipated spot Bitcoin ETF announcement. Investors restarting the countdown clock for an official announcement from the U.S. SEC less than 24 hours after a hoax of a social media post set the crypto world on edge. What do we know now? Well, what we know is that regulators are said to be voting this week on those filings by the exchanges that would list Bitcoin ETFs, and they are potentially also deciding on registration applications from the would-be issuers as well. Eric Balchunas over at Bloomberg Intelligence says he thinks those decisions could be made public within the next few hours. Katie?
And as we count down, let's bring in Dave Natick right now. He is financial futurist over at Vetify. And Dave, we'll get to what's coming potentially later in the day, but let's talk about yesterday. Your reaction to what we saw play out on X with the SEC, of course, that unfortunate hack there. Do you think that this delays the process at all?
No, I don't really think so. I mean, I think everybody's trying to tease apart whether this was sort of a nefarious actor trying to front run a trade. And certainly you could see what happened with Bitcoin and really what happened with ETH as well. You saw Bitcoin dump and ETH really spike at one point there. So definitely there's a lot of shenanigans going on. I don't think this actually slows down the process. I certainly think it's going to be an interesting morning to walk into the SEC because I think they're going to be doing a lot of auditing on their processes and procedures.
Yeah, I think there are a lot of unhappy people over at the SEC right now. So let's talk about what happens if we actually do get off the ground. If we do see these ETFs launch as soon as tomorrow, current reporting shows. You actually authored a piece yesterday titled "Why a Bitcoin ETF Doesn't Matter." Tell me about that.
Well, look, I mean, it's a bit of a hyperbolic headline. Obviously, it matters in the sense that if you're holding Bitcoin, this is a catalyst for new supply and it's for new demand. That's obviously constructive on the price of Bitcoin. My point was simply that this doesn't actually get the U.S. any closer to being in the crypto ecosystem, right? The U.S. is currently one of the worst jurisdictions to try to do a crypto project in the world. You're better off literally going to Malta and hiring a bunch of developers there. There is no overarching framework like there just was implemented in the EU with the MiCA regulations. So there's no structure in the U.S. that allows us to participate the way crypto should allow us to participate. Simply allowing people to grab a little Bitcoin in their 401k or IRA, yeah, it makes the price go up, but that's really all it does.
But could it potentially be the starting point? You talk to a lot of the investment advisors out there who've made it clear. They've had clients coming to them asking them for exposure to crypto and also making it clear that for some of them, and this is more in the traditional finance world, didn't actually have authorization to allow them to buy physical, actual crypto coins. With the ETF, of course, those restrictions are gone and they can push those ETFs as hard as they want.
Yeah, look, like I said, I think this is very constructive for the price of Bitcoin, but think about who those buyers buyers are, right? If you're a financial advisor and you've got a bunch of wealth clients, they're not really investing in the crypto ecosystem. They're investing in a trading sardine that they're expecting to trade at a higher price later because they have some belief about the ecosystem and the long-term demand for Bitcoin and the cutting of supply that we know is coming this year as well. But that doesn't actually advance the promise of crypto. That doesn't make for a decentralized monetary system. That doesn't allow for decentralized settlement of securities products. All the things that we know crypto could be doing, none of that is advanced. And frankly, none of those buyers are participating in that economy.
That's a great point. You also know that, of course, you have a lot of regulators that don't want to see that sort of a deconstructed future. I mean, decentralized future. They want it under their umbrella, or at least under someone's regulatory umbrella. And a lot of people maybe see the approval of the spot Bitcoin ETFs here as kind of the starting point for greater regulation of the industry.
I'm a seller on that narrative, to be honest. If you look at how things like stablecoin regulation, which is the most basic level of crypto regulation we should have, that has been stalled forever. This year we got it out of committee. Yay. Like, that's where we're at.
Okay, you know,
well, with this Congress, that's an accomplishment.
We have to take the small wins, but point taken there. Let's talk a little bit more about these ETFs, though, because as you know well, we're talking about a dozen or so. The number's fluctuating a little bit there, but let's say they all come out of the gate at once. So there's no first mover advantage. They're all holding the exact same thing. Is the only thing to evaluate these products on is then fees? If you're a financial advisor, what does your due diligence look like here?
A couple of components. So one is fees, absolutely. And certainly if we're talking about long-term allocations and things like model portfolios, fees are really going to matter, and not just waived fees. Everybody's talking about, oh, everybody's waiving their fee. That doesn't matter. If you're building a model portfolio for the long term, you're looking at the long-term rate. By that mark, I would say Bitwise is probably a little ahead at 0.2, I think is where they're at, 20 basis points right now. That does matter. The other thing that matters a lot, though, is volume. Like, liquidity will be what determines where the options start trading, and those options are going to create an entire ecosystem all by itself. I would think it's hard to bet against BlackRock there. They have a couple hundred people in the capital markets desk, probably the best capital markets desk in the world. I'm sure they're having very, very pointed conversations with all of their market makers, trading partners, and institutional investors about using their product, even though it won't be the cheapest one out of the gate. If they do that well and they get the volumes up, that's going to kick off the options market. Hard to call when that will happen. There's an exchange process, and the dealers have to sign on. But it could be a matter of weeks, even shorter.
All right, Dave, great conversation. Of course, we are on watch for that potential announcement today. Dave Natick, financial futurist over at VettaFi, helping us kick off to the close here on this Wednesday afternoon. Coming up, a look at shipping containers stuck right now out there in the sea, finding new routes as Houthi rebels launch their largest missile and drone attack yet on ships in the Red Sea. The latest on the U.S. response.
Plus, as the U.S. political season heats up, so does political advertising, which is expected to set a record this year. We'll have the latest on a new advertising partnership launched today at the Consumer Electronics Show in Las Vegas.
And more corporate job cuts. This time, Amazon said to be laying off hundreds of employees in its Prime Video and Twitch businesses. We're going to take a look at what's behind that move, particularly after that company had just beefed up that staff over the last 2 years. That conversation and so much more coming up in a bit on The Close. This is Bloomberg.
Next week, Bloomberg is live at the World Economic Forum annual meeting in Davos, Switzerland. As markets anticipate a dovish pivot by central banks, policymakers grapple with two wars on the global stage, and AI continues to dominate the tech headlines. Trust Bloomberg for the fastest coverage and exclusive analysis from the world's top leaders and experts. Coverage begins next week, only on Bloomberg Television and Radio.
All right, welcome back to The Close. Our next guest is a legend in the world of investing, particularly in emerging markets. And last year made some big and profitable bets against the grain, I should add, in 4 companies controlled by Adani Group. He also had some big hits here in the U.S. with bets on NVIDIA, Meta, and Alphabet. Rajiv Jain is the chairman and chief investment officer over at GQG. He has over $105 billion in assets under management after just having that firm for about 7 years. Rajiv, great to have you here in Studio 2.
Thanks for having me.
Let's start here in the U.S. I was taking a look at some of the more notable holdings you had, and I was taking a look at NVIDIA, taking a look at Meta, taking a look at Alphabet. Those three stocks on their own could have been enough to keep that portfolio well above the waterline.
Yeah, look, I think last year was quite a switch from 2022, as you know, but we still feel these things have a lot of runway in front of them, including NVIDIA. So,
well, that's what I'm curious as to sort of what caused you to enter those stakes, increase those stakes, and more importantly, what is going to keep you to stick by those stakes?
Well, obviously different stories for each of them. But if you look at NVIDIA specifically, the transition to GPU is still in early stages from CPU for the hyperscalers, so on and so forth. And the stock is actually now 22, 23 times earnings, which we believe is understating the reality. We feel it's under 20 times earnings for a business that is, basically game-changing in a number of different ways. So that is by far the largest position. So I think there's a long runway of some of these. There'll be cyclicality and volatility in between.
Well, that's what I want to talk about. Cyclicality aside, what do you actually look for when you're investing and when you're identifying these names? A blunt way to put it would be, how are you going to find the next NVIDIA?
Well, I can't predict the future. Like I would have predicted Adani will come along all of a sudden, right? Last January, we didn't know that we'll be entering. So a lot of this is opportunistic. And NVIDIA has a long runway. Hopefully, we own for a long time. But what we look for is barriers to entry. Are these replaceable businesses or not? And then the question is the outlook improving? And if you look at today, the outlook is still getting better for companies like NVIDIA. And there are a whole bunch of others. So we're generally pretty upbeat on tech, by the way.
Yeah.
Which is slightly different from, because we entered last year extremely underweight tech. And here we are, very, very upbeat, particularly on the semiconductor side.
So when you hear people, calling for diversification, talking about how this rally is going to broaden out and potentially leave tech behind, it sounds like you would take the other side of that.
At the end of the day, earnings is what matters. And yeah, the markets may be narrow, sometimes broaden out. It doesn't really tell much about the longer term outlook as such. So we feel we're perfectly happy owning a few of these names, and they're still delivering perfectly good numbers.
Is there any worry about economic conditions working against some of those trades? It's one thing to say that we're sort of at this edge of some sort of transformation in the way we use computers and obviously the technology that's going into that here. But there also has to be money to support that expansion. Is that money there, whether it's coming from the consumer or the businesses?
I think it's much more enterprise focused, and they just dollar shifting from one pocket to the other pocket. So we feel these companies are in better position than usual. And even with a company like Meta, it's 17, 18 times earnings. The ad impression is still growing at north of 20%, right? User base still growing. For a business of that size and magnitude, it's still delivering that kind of growth. It's quite amazing.
Does that not scare you? I mean, when you consider the size of these companies, the maturity of some of those companies, and the growth rates that investors seem to be pegging, at least based on the stock price.
But for these companies, I don't disagree. But for these companies to sell at below market multiple and an absolute basis, you could get a lot less and pay a lot more in a whole bunch of other businesses. A lot of industries sell at 25 times earnings. You have to wonder, why are industrials selling at those kind of valuations versus companies like Meta selling at 17, 18 times earnings?
I want to broaden out a little bit, and I want to talk about India, because there was a great Bloomberg News article last month saying that if you look at the value of your India portfolio, it more than doubled in a little over a year. Talk to us about the outlook for 2024 when it comes to India specifically.
So as you know, we've been reasonably bullish, and we continue very bullish. There's obviously shorter-term data points people are concerned about. We are not that concerned about elections. They'll come and go. But if you look at the underpinning on the infrastructure side, the government is spending more. There's a lot of privatization happening. And so the growth story in India has shifted away from what used to be the case. IT services, consumer staples, and even some of the banks. We do like some of the banks. However, it's shifted to infrastructure, which I've talked about here on this platform last year. That's in early stages.
Okay. So,
and Adani has a lot of fuel in the tank on a longer term basis.
Yeah. Okay. So early stages for infrastructure, like you said, you're feeling positive about some of the banks as well. Where within the India economy would you avoid when you're taking a look at these different industries?
Yeah, there's a lot of company specific that we would avoid, partially because of valuation. Like consumer staples, one area. If you look at some of the large staples, they're delivering very low volume growth, but the valuations are 50, 60, some cases 70 times earnings. you're not really getting paid for that. So I would avoid probably those areas.
Is there a sense here when we talk about the India market and how it sort of connects to the rest of the emerging market space here? Is the interest in India, meaning the actual money that's flowing into some of those investments, is that actually coming at the expense of other large emerging market nations, primarily China?
That's the interesting part. Money has not come into India. Last 2 years, India has seen the most outflows in almost 2 decades.
Really?
So money has not shifted into India at this point.
Why not?
Well, I think people find some of these names expensive. They're complex stories. This is not like consumer discretionary or tech names.
Right.
And the concerns of elections and 50 other reasons.
50 other reasons. When it comes to EM broadly, though, I mean, we've had a lot of conversations about China. China was one of the big disappointments of 2023 when you think about the consensus heading into the year. And EM ex-China performed fairly well. When you're thinking about India and the Indian economy, I mean, do China's woes bleed into India at all? Or what is China's effect on the broader emerging market sphere?
It's hard to answer because it could easily bleed into if there's a massive blow-up situation in China, right? But if you look at the drivers for China today, they are very different from what's happening in India. They may be similar to what happened in China maybe 20 years ago. So the Indian markets are at this point driven much by local money, mutual fund inflows rather than foreign money. So in fact, that's why it's acting a lot more, in an uncorrelated manner. But if you look at the China as such, I think one of the problems in China is the index itself in China is much more tech heavy versus what the real economy is. And vast majority of investors do not own state-owned enterprises, which seem to be doing fine. If you look at a lot of energy names in China, there's no bear market in that. If you're in Tencent, okay, different story.
So you have to be selective when it comes to China. But at this point, Rajiv, we've talked about tech, we've talked about Meta, we've talked about NVIDIA, we've talked about India, some of your big high-profile wins. When you look further into your portfolio, what are some of the lesser-known wins that have come to fruition?
We have talked about before in prior sort of meetings, but if you look at Brazil, we are quite bullish on Brazil. Petrobras has been a big position for us, still is. When we bought it, it was probably 40% dividend yield. Now it's gone up a little bit, but it's still 20% dividend yield, by the way. No. That makes no sense. That's a $70 oil. You don't need high oil. So there are a lot of things in Brazil. We incrementally getting much more bullish on Middle East. In UAE, Saudi Arabia, I think there's a lot of interesting things happening there. Economies are opening up, so there's some interesting stuff. Not big investments, but so.
I am curious with regards to Brazil. Does the geopolitical situation there worry you, given that we have another election and we know the transitions of power, at least over the past few election cycles there, usually does result in some material change in policy that could affect some of those investments?
But you get time to react. It is not instantaneously you see reaction. And I think if you look at countries like Brazil, the election risk is a lot less than what people think it is in the short run. You get time to react, and then you see how the policies are. But I think there's a big change that has happened in Brazil because of reforms that have taken place. See, if you look at emerging markets in particular, what happens is that good markets lead to bad policies or bad behavior. Bad behavior leads to bad markets. Bad markets lead to good policies and then good markets.
Okay.
Right? So that cycle has played, I've seen them a few different times. I think we're entering good markets after good policy in the last 5-6 years.
Okay, I'm going to rewind this tape and take those notes down because that might be the investment advice of the day. Rajiv, great to have you here on set. Rajiv Jain, GQG Chairman and Chief Investment Officer. All right, coming up here after the break, closer look at what's been going on out there in the Red Sea. Yemen's Houthi rebels launching their largest missile and drone attack to date out there. We're going to get the latest on the U.S. response. That's coming up next on The Close. This is Bloomberg. Houthi rebels have now launched one of their largest missile and drone attacks to date on commercial shipping lanes in the Red Sea. For the latest on the situation, let's go out to Washington, where Bloomberg's Jordan Fabian is joining us for more here. And there's pretty some dramatic pictures that we've seen, as well as accounts here of military, U.S. military, I should say, engaging with some of those drones and other rebel vehicles. I am curious as to just what is the extent of the U.S. military involvement right now in combating these strikes.
Well, Romaine, there are a lot of warships out there, both belonging to the United States and also allies like the United Kingdom. They've been flying airplanes off of aircraft carriers to shoot down these drones and missiles that have been targeting commercial shipping. And now the U.S. and its allies are considering whether to escalate those actions because they have not deterred these attacks. They've only continued. So the question is now whether they hit Houthi targets in Yemen in order to discourage further attacks.
Well, Jordan, that's the big question, right? When does the U.S. potentially go from deterrence to maybe going on the offense here? What does your reporting indicate about what the potential tipping point might be?
It's a tough question. This was asked to White House officials today, and they really demurred. They say they're not going to telegraph their next move, but there are talks behind the scenes between the U.S., the UK, the Saudis, and other Gulf states. And there is concern among Gulf states and also UK leaders that striking targets in Yemen could further escalate the broader regional war that's going on. This was all teed off by the conflict between Israel and Hamas. And that's not something they want. They want to contain the conflict to that area. They don't want to see, for example, tensions in the Red Sea increasing, conflict between Israel and Hezbollah on the northern border, between Israel and Lebanon increasing. So they're proceeding very carefully.
Okay, well, we already got all of that. So I guess it's not so much a matter of whether it happens, but more of degree. And it does get us to the question of whether there are other options. I mean, normally when you're engaging with state actors, there are economic embargoes, another thing that you can to fight them. But does that work against a Yemen? Does that work against an Iran, which is already heavily under economic embargoes already?
That's a great question, Romaine. And, the Houthis are, in charge of large swaths of Yemen, but they're not really a state actor. So it's a very complicated question of could you sanction them and discourage this, but, tracking down their assets could be very difficult. So any sanctions might have a limited effect there. So really, the U.S. doesn't have a lot of diplomatic leverage with them. And so the question is really what militarily can they do? And that carries a lot of risk.
All right, Jordan Fabian, down in Washington, a closer look at the latest developments going on out in the Red Sea. And Katie, we've been talking a lot about all the routes, these detours that ships are having to take to avoid that. More and more shipping companies have basically said they're just not even going there. They're avoiding the Suez Canal. I saw an interesting stat. They actually said that traffic through the Suez Canal is now at the lowest level since 2021. And do you know what happened 21? Remember when the Ever Given got stuck in the middle of the channel?
Romaine, I would never forget. Yes. Never forget. Those images were amazing. But that really speaks to really the choice that they're having to make. I mean, you think about what happened in 2021. You literally could not get by. The fact that traffic is back to that level really speaks to the calculus that these shipping companies are making, that it's just not worth it. Yeah, it's not worth it. But then what's the effect of that? Does it, I mean, obviously it's raising their costs. We just had the chart up on the screen showing container rates going up here. But the question is, when does that trickle down to the consumer? Big time. And what does that mean potentially for the Biden administration trying so hard to get a grip on inflation, kind of at the mercy of the Fed? Obviously another headache. Have we gotten the spot Bitcoin ETF yet? Not yet. Not yet. I will tell you. Okay. All right. Stick with us. A lot to come right here on The Close on Bloomberg. This is the countdown to the close. Taking a look at the broader market right now. Green across the screen for all of the major U.S. indices here ahead of what could potentially be a big inflation report tomorrow. But all eyes still on the commodities space, which is showing a little bit of a retreat here on this Wednesday afternoon. WTI crude has been all over the map today. Settlement coming in just a few seconds. Looks like we're going to settle just above 71 bucks a barrel, down by about 1% here on the day. Keep an eye on gold futures as well, particularly in light of that inflation report tomorrow, and particularly in light of the potential approval of a spot Bitcoin ETF, which maybe, I guess if you believe Bitcoin is a hedge, could provide some competition for gold. Futures down there by about 0.2%. And base metals have been really on the back foot here. In fact, it's probably been the biggest flop in the commodity space to start the new year here. You see iron ore prices at the bottom of your screen. That's the new session coming out of China right now. In the previous session, they had actually dropped by the most that we have seen going back to October. That's on the back of relatively weak demand coming out of China. Aluminum futures also lower here on the day, and also seeing some relative weakness in copper futures as well, though we should point out settlement over on the LME on copper is in the green, but only by about 1 point. Katie, I know you keep a big eye on what's going on in the commodities space, and I love commodities
But I do want to go back to gold question.
Yeah.
Because there's been all this discussion about this spot Bitcoin ETF, which I'm told may or may not happen. You know, we had a little hoax yesterday in case you weren't watching.
I heard about that one.
But it raises the question as to the broader adoption of owning crypto assets overall. Obviously, this would just be Bitcoin specific. But does that become competition for things like gold and silver and other things that have traditionally been seen as a hedge?
It's a great question, especially because I talk to a lot of people about Bitcoin, and sometimes,
whole day, I'm told.
sometimes I say, make it make sense. And one of the ways that they do make it make sense is they say, think about it as digital gold. A lot of people actually do think about it in that way. In terms of whether it proves to be competition for gold, when it comes to the ETF wrapper, that remains to be seen. That's one of the storylines to follow. I will say, of course, we've had this conversation around adoption, whether there are people out there waiting for these spot Bitcoin ETFs to launch. You think about the introduction of physically backed gold ETFs. They're pretty huge now, and it's been pretty monumental for the gold market as well. So if that's your blueprint, this could be a watershed moment.
Yeah.
All right, still ahead, we're going to discuss how the latest global chips data points to a rebound in emerging technology. This is The Close on Bloomberg. All right, we do want to bring you some breaking news. This from the SEC releasing a statement on a probe of its X account. Remember, yesterday, shortly after 4 p.m., there was a post on the SEC's official X account saying that the SEC had approved spot Bitcoin ETFs. We heard from the agency shortly after that that was from an unauthorized actor. Now we're seeing this statement come out now. The SEC saying that the FBI is investigating the hack of the agency's X account. The agency also repeating that the Tuesday Bitcoin ETF post wasn't done by staff. So this is a story we're going to continue to follow, of course, as we continue to count down to a potential decision today, actually, on a spot Bitcoin ETF.
All right, let's take a look. We're going to get back to that story in just a little bit here. Let's take a look, though, at what's been going on in the sell side with our top calls here on the day. And let's kick it right off here with Zillow and a cut to neutral over at Bank of America. Analyst Curtis Nagel saying that 60% rally that we saw in the stock over the last 2 months of 2023 is more than enough to account for a housing market recovery. He says investors, though, should tread carefully now, as even with lower interest rates, sales volume upside would be limited by record low volume affordability. All right, now we can take a look at the Home Depot. Raised to outperform over at Wedbush. Lower interest rates, promising housing trends, higher consumer confidence, all expected to boost home improvement sales, making Home Depot the prime beneficiary in the analyst's view. Those shares higher on the day by 2.5%. And finally, we'll take a look at that group. Upgraded to buy over at Jefferies. The analysts foreseeing that chip makers are bound for a strong 2024 and says that VAT's wafer equipment forecast could support a 45% rebound in CapEx. You're taking a look there at the Swiss shares of the company. They're higher on the day by about 3%. Those are some of our top calls, and we want to stay in the chip space right now with a closer look at semiconductors. And well, the outlook for 2024. We are starting to see a rebound according to data coming out of the Semiconductor Industry Association. Revenue in the month of November grew to $48 billion. That's a more than 5% increase from the year prior. Let's get some insights out of Ian King. He joins us from San Francisco. He covers this industry better than anyone else here. And I look at those numbers, Ian, and I guess that's pretty encouraging. I know 1 month does not make a trend, but are you seeing a trend line being formed to the upside?
It really depends who we're talking about, Romain. I mean, for some sectors of this industry, absolutely, yeah, things have gone through their worst part, where, notably the PC market and the smartphone market. So we've seen that kind of inventory pileup sort of go away. So now we're getting something of a return to ordering. But other parts of the industry, automotive-related semiconductors, not so good. And we've already seen some sort of pre-announcements related to that particular sector. So I think that the right answer here is that overall, yes, the trend is better, but it really depends on who you are as to whether the trend is better for you or not.
Well, Ian, to that point, it depends on who you ask. Let's ask TSMC, because a headline out on the terminal that TSMC halts sales declines after AI demand offsets some overall chip weakness there, rather. So how does TSMC fit into some of this data that we're starting to get?
Yeah, no, that's a good question. They're ultimately the perfect bellwether for all of this. They are the largest foundry. They make chips for pretty much everybody. And what we've seen from them is that, the older stuff they were making, the less kind of important chips, the utilization there wasn't so good in their factories because they weren't getting the orders. But for things like the NVIDIA chips that they make, these go into the data centers for AI, ordering was really strong. And now that perhaps some of that lagging demand is kind of coming back a little bit, they're able to really benefit from the demand for really expensive chips from the likes of NVIDIA, from the likes of AMD.
Well, let's talk a little bit more about NVIDIA, because as we know, that just continues to be the stock. It was certainly the stock of 2023, and at least right now, it could end up being the stock of 2024 here. Is there any sort of sustainability that you see there? I mean, we were just speaking with Rajiv Jain, who is a big investor in NVIDIA, and he actually said that he sees better times ahead for this company, despite the big run-up that we've already had in the stock.
Yeah, I mean, quite remarkably, when you're given a stock that's, as big as this stock has become, that tripled last year, people are still saying, yep, room to roam here, and that's quite, surprising. But then you look at what the CFO, Colette Kress, said yesterday at the JP Morgan conference. She said, yeah, what the CEO told you about us growing into 2025, we can completely support that. We see the orders, we see the demand. So for now, that appears to be the case. And if you actually look at the company on a PE basis, it's not the most expensive out there. Other companies amongst chips are more expensive.
All right, Ian, always great to catch up with you. Ian King out in San Francisco, a closer look at the chip space. And speaking of chips, speaking of technology, there is a big conference underway out in Las Vegas. The annual CES conference is underway here. A big focus on AI, a big focus on some of that hardware, but also a big focus on advertising. Advertising dollars spent on U.S. elections and advocacy issues are expected to grow to about $16 billion this year. That would be up 31% compared to the last presidential election cycle in 2020. That's according to a forecast from Group M. Now, with an eye on those numbers, the marketing company Stagwell has just announced a partnership with the connected TV ad platform Mountain. Pleased to say joining us right now is the president and CEO of Mountain, Mark Douglas, and the president of Stagwell, Mark Penn. Thanks to both of you gentlemen for taking time to be with us here. And Mark Douglas, I will start with you here. I assume this partnership had more to do with just the fact that both of you are named Mark.
That certainly helps in getting the partnership started. So yeah, we both are focused on performance marketing. And so Stagwell is by far the premier agency holding company in performance marketing. And Mountain, as you guys know, we basically pioneered performance marketing on television. So we're coming together to bring all of Stagwell's capabilities. They actually have their own marketing platform that we're going to be bringing to our customers. They're bringing our television performance TV platform to their customers. And this is, we think, the year that large advertisers really truly move beyond Nielsen and start to focus on really measurable television advertising. So that's what we're pursuing together.
Well, then I'm curious, Mark Penn, particularly when it comes to political advertising. And we know just the way we consume media has changed a lot just since the last election cycle 4 years ago here. How effective is this sort of a new approach to platforming these advertising? How much more effective is that going to be at hitting your targets for who you want to reach with those ads?
Well, we're big believers at Stagwell in performance marketing, that really the industry had been dominated by brand, and we really came at it from the performance angle. And of course, political and non-political today are I think, much more driven by that performance nature. And the ability now to work with Mountain to extend that to connected TV is just super important. I think what's really happened is we know that television advertising is a more emotional kind of medium, and to be able to finally target that on an expanded basis is probably going to be at the top of the heap in terms of advertising in the next year or so.
Well, Mark Penn, let's talk a little bit more about what success looks like when it comes to political advertising specifically. Does that mean necessarily energizing a base, or is that when you talk to like some of your clients, for example, is that more about trying to maybe flip people? What does success look like?
Well, there's really two kinds of political advertising. One is to go after swing voters and persuade them to change their mind. When it's a 50-50 country, that can be particularly effective when you look at the math of voting. When you take one column from the other column, you in effect make up two. The second kind of advertising is to energize a base, and that tends to be kind of what I'd say more acerbic advertising, designed really to, I think, play on intensity of feelings. And depending upon what stage of the campaign, usually swing voter advertising is earlier and ignite your base advertising is later.
And I think we're all familiar with both types of advertising. Of course, you turn on the television and you can't escape it. But Mark Douglas, I mean, we're having this conversation in 2024. You think about the ad dollars being spent this year. Is it safe to say that the bulk of it is going to political ads?
Well, I mean, obviously the whole TV ad industry is like, 60, 70 billion this year, probably even larger with these political dollars coming in. So it's certainly a big part of it going in the year. What you're seeing happening in television overall is this move from linear TV to streaming. So all those political ads and basically advertising for any size brand that might have just gone out and broadcast in the different zip codes is now, effectively can be highly targeted, highly measured. That's going to affect all brands, and it's going to affect both political parties. And Stagwell is right at the center of that in terms of the agencies they have that focus on politics and all the other brands, and then obviously Mountain's in the middle of that and bringing those performance capabilities directly into television.
There's been such a transformation of this industry, some of it by choice and others, I guess, just kind of dragging the industry, kicking and screaming into it. And so I am curious, Mark Douglas, given your history in working with a lot of these platforms, and more importantly, the folks who are looking to get on those platforms here, does this amount to a material and structural sea change in how advertising is going to be doled out in the future?
Yeah, I think one of the most interesting announcements this week at CES from the advertising and media perspective was NBC's announcement. They announced that they expect 60% or more of the advertising dollars to now be digitally targeted. So you're talking linear TV ads, streaming TV ads, that they expect more than half their revenue. We're talking that's over $15 billion in revenue that's now digitally targeted. Literally like 3 years ago, that was just reach and frequency to people in age groups. And now they're talking about, no, it's based on interest. It's based on, the example we've been using, political affiliation. I mean, that's like a massive change. Tens of billions of dollars that are now, kind of being spent on television in this kind of digital way that just wasn't happening 24 months ago.
Mm-hmm. And Mark Penn, I mean, there's a lot of talk here about how we utilize artificial intelligence and some of the other language models here to tailor make these ads in a better way, to place them in a better way here. What's the integration of that look like?
Well, I think you're going to see the integration of AI, I guess, in a lot of what I call the tier 2 content, which is to say tier 1 content is primarily based on human originality. But once you have a basic framework then, and you're going to put things in so many different contexts and so many different communities, let's say you want to localize, you want to have a picture of a baby being born, and you want to say that you want to, for each community, you want to localize it. That's the kind of thing that AI is great at in terms of creating expanded, localized content once a real creative comes up with a framework. So I think you're going to see here, it's not one or the other. It is the merger of human creativity extended through AI that you're going to see coming from the agencies at Stagwell.
All right. Well, our thanks to both of you there. Of course, Mark Penn, a longtime pollster here, former chief strategy officer at Microsoft, now leading Stagwell. And our thanks to Mark Douglas there, former tech executive who now runs Mountain, the ad placement platform. Coming up here on the program, we're going to check in with John Medved, Our Crowd founder and CEO, about how startups in Israel are doing as the war over there persists now for a third month. That conversation coming up after the break. This is Bloomberg. Welcome back to The Close. It's time now for our Wall Street Week daily segment. The host of Wall Street Week, David Weston, joins us as he does every day at this time. We should point out it is January 10th here in the U.S. We're now 3 months removed from that just horrific attack by Hamas on those primarily civilians in Israel back on October 7th here. A lot of questions here about when the war could be potentially resolved, but more importantly, how the companies and the economy is doing over there in Israel.
Yeah, and no end in sight, as you suggest. And obviously, it's a tragedy for everyone involved in Gaza and otherwise, but also has some economic effects, particularly on the so-called startup nation. As we know, so much of the Israeli economy is dependent actually on tech startups. So we check in from time to time with somebody who knows this terribly well. He's John Medved, our crowd founder and CEO. He's the most active venture capitalist in Israel. And we asked him exactly where we stand this far into the war.
We're now 3 months into the war, and what we predicted would happen has happened, which is the initial reaction is that markets are afraid when we go to war, the shekel and the stock market drops. But I think I was actually with you, David, just a few months ago at the beginning of the war, and I predicted that we would have a very fast recovery, and that is what has happened. Turns out that the shekel is now, fully back to where it was, actually better than where it was before. The stock market has made up all of its losses, and the startups themselves are really using a lot of grit to be resilient, and that means to make sure that they can deliver. There's been a slogan here: Israel Tech delivers no matter what. And people are working very hard, and the startup community, I think, is weathering the storm well.
Give us a sense of that storm and no matter what's involved in that, because I saw there was a report out of a Startup Nation that said actually tech startup money had really gone down year over year. So what's being done to supply that money?
It turns out that the startup community in Israel in 23 ended up still raising $7 billion. Now that was down from about $15 billion the year before, and down again from 21, where it was $25 billion. So it's a significant drop, but it's more or less in line with the global trends. And now the question is, what are we going to do as we come out of the war, God willing? And are these startups going to join in the overall recovery, which I foresee going to affect the global venture market?
And an important aspect of this, as you and I have talked about before, is the so-called runway for the startups. How far out can they go? There's some concern that runway has now gotten extended to some extent because of the war in part. And talk to us about the resilience fund that you've been involved in putting together to try to help with that problem.
Well, as soon as the war broke out, we decided that we had to take action and to raise a special fund that would enable companies to extend their runway, right? In other words, startup companies, by and large, are not profitable. They need investment in order to get to their goals. And the problem, of course, is that in war, it's not always the easiest time to get this investment. So we created a vehicle. We announced it about 2 months ago. And literally in these 2 months, we've managed to get to our first closing. We're now at $15 million of commitments. But more importantly, we've made actually 18 different investments in companies where we're choosing companies that have been affected by the war because they have team members who are in the service, they are on border zones like in the north or the south, or that they somehow are providing critical technology for the war effort. So these 18 companies have been very carefully selected. We've done the diligence. They run through our investment committee, and we act as sort of a catalyst to bring additional money from both investors alongside of us, both inside the company and new investors, as well as the government, who is providing matching funds.
That is John Medved of our crowd. And as you heard him say, the tech industry keeps going over there. One of the remarkable things he said to me was actually a lot of money is coming from outside Israel and the United States. I thought perhaps they wouldn't be getting money from the rest of the world, given what we've heard. He said, no, they're getting it from Asia, they're getting it from Europe. They're getting a lot of money from outside of Israel, actually.
Yeah, well, when there's profits to be had, people, I think, tend to be a little agnostic when it comes to geopolitics. So,
son of a gun, son of a gun.
Yeah.
And in the meantime, later today, we're expecting to get that decision out of the SEC, right? And the Bitcoin
let's hope so.
spot ETF. So tomorrow, we're going to talk to Tid Massad for a little bit of a postmortem. He's the former chair of the CFTC, and we'll talk to him about whatever the SEC does end up deciding. And then on Friday on Wall Street Week, we're going to hear from Glenn Hubbard of Columbia Business School about the economic issues for whomever wins the presidency this November. That will be at 6 p.m. Eastern Time on Friday, Romaine.
And you can catch David every day around this time right here on The Close for our Wall Street Week daily segment as we round out into the final hour of trading here on this afternoon here. Stocks in the green solidly across the board here, but still a little bit of a holding pattern as we wait a couple of potentially big developments, including the potential approval of that spot Bitcoin ETF and a big inflation report tomorrow morning. This is Bloomberg. Just about 3 p.m. here in New York. This is the countdown to the close. Let's get a view from the top. I'm Romaine Bostic.
And I'm Katie Greifeld.
Katie Greifeld. Stocks are higher on the day here. Pretty significant gains, too, we should point out. The NASDAQ up about 1% on the day. S&P up about 0.7% here. And the big question is, why was things so weak yesterday but strong today?
It's a great question.
Talk amongst yourself.
It feels like, again, that we're in this holding pattern. Things will start to heat up around tomorrow. 8:30 a.m. we get that CPI report. Of course, we are heading into earnings season starting on Friday with the big banks, but still very feels like the Fed is the center of most of the conversations we're having. Yeah, and you could really see that reflected right now in what's going on in the yield space, which is not much of anything here, a holding pattern, particularly when it comes to the rate-sensitive 2-year yield. The dollar basically unchanged as well here. But let's talk about, well, something that happened yesterday that didn't actually happen, that may happen today. And that, of course, is this potential approval of a spot Bitcoin ETF application, or applications, plural. Yes.
Katie Greifeld. You see Bitcoin still holding around that 47,000 level. Who you got?
I'm interested to see the price reaction when we do get this this approval.
Were you watching yesterday? This is what happened after you went home. See, everything happens after you go home, Kate.
Yeah,
you got to start staying
Actually,
late.
I was in the building. I was on the phone with Kathy Wood of all
people. You were?
People.
So you were actually working?
I was actually working, and it was pretty amazing trying to sort it out in real time on the phone. You can see that spike there, and then that quick fall. It's going to be interesting to see if we can actually extrapolate anything from that into when we do get that decision. I'm not going to say approval. I'm not going to jinx it. Let's talk about some individual equities because things are moving in the stock market. Let's talk about Amazon. Of course, Amazon moving about 2% higher today. This after news that their live streaming site Twitch is cutting 30% of its staff. That amounts to 500 workers. This is according to the CEO in a blog post this morning. These layoffs, the latest in a series of job cuts over at Amazon, but shares. And
some of those are coming out of that new MGM division, which I feel like they just bought. So,
yeah, I know. Yeah. So interesting moves over at Amazon, but shareholders not fussed about it. Shares moving higher today. Let's also talk about Toast. This is an interesting one. I didn't really know what this was. Apparently, it's a cloud-based restaurant management software company.
Do you not eat out ever?
Apparently not. Or maybe I just never pay. But
that's it.
Toast,
wow, nice life you got there.
Toast is rallying today. Goldman coming out and upgrading them from a neutral to a buy. They think that the market is not accounting for what we expect to be a materially better profitability trend in 2024.
You got to stay in touch with the people, Katie. You got to get out there. Just try to swipe your credit card once,
just
so you know how to do it.
Yeah.
You don't want to be like when George Bush, didn't know what the cost of milk was, didn't know how to scan it.
It's important to have, tools in your toolbox. But let's also talk about Coinbase. So we've already kind of talked about the story there. Okay. Coinbase pretty much flat on the day, like Bitcoin. It started the day on the back foot. A lot of jitters. A big run up in both Bitcoin and Coinbase stock. Yeah. We'll see if this is a sell the news event.
We'll see. Let's hope it's an actual event.
Yes.
1 hour away from the closing bell. Our cross-platform coverage of today's big stories, it starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Romaine Bostic alongside Katie Greifeld. We're now joined by our colleagues Carol Massar and Tim Stenovic. A hearty welcome to our audiences across all of our Bloomberg platforms, television, radio, originals, and of course that big partnership that Carol Massar loves, those folks still streaming on YouTube.
You love it too. Come on.
Somewhat.
You can share. You're among friends. Hey, lot going on, a lot for us to all watch. We know it. It's still kind of early going in 2024, but there's a lot on our plate, whether it's worries about inflation, Fed policy, what happens. Do we get a spot Bitcoin ETF today? We got a little bit of a fake out yesterday. So there's a lot on our minds.
But why are you picking wounds here? Yeah.
It was crazy. Having said that, for one of the world's richest, on his mind, we're talking about Mark Zuckerberg, you know, that little known company that he helped co-found,
Heard of it.
Meta. On his mind is actually cows, Tim.
Well, on his plate is meat from these cows. So I don't know if you saw this yesterday on Instagram, but Mark Zuckerberg, there's a picture. He posted an image that included a caption that says he's raising his own cows on Hawaii. And not only that, but they're going to subsist on a diet of beer and macadamia nuts. There's a picture of
who, Zuckerberg or the cows?
The cows, which is a very good question because it turns out Zuckerberg's cows, they live pretty well until they're slaughtered, I should note. They live pretty well eating beer and macadamia nuts.
Well, do cows like beer?
They do.
I feel bad for the cows.
They do, actually.
They do like beer.
Okay.
Who doesn't like beer?
And it actually makes their meat very, very good.
As long as the cows are happy.
I love this story.
Isn't it a great story?
Well, first of all, kudos to him. I mean, we can hate on Zuckerberg another day, which I certainly will. But I like the fact, remember he did before he decided he was going to go a whole year where he would only eat meat that he killed himself because he wanted to kind of get in touch. And I know there's a lot of ethical debates about this.
He does these yearly goals.
But the idea that he at least has, you know, some life outside of just, you know, running a big company and doesn't spend all day on, you know, X tweeting out conspiracy
It's all about
theories.
that bunker he's building in Hawaii.
He's on Meta.
Oh, he's on Meta tweeting out conspiracy
he's on
theories.
Instagram Reels, you know.
It honestly looks like he's living his best life. You know, it looks like it's
so
pretty
are
good.
the cows.
By the way, a pound of macadamia nuts goes for about $15.
Wow.
And cows eat a lot of these macadamia nuts, so.
Okay.
Yeah.
Well, he can afford it.
Yeah, he can.
Yeah.
I was reading this whole thing about, like, you know, everyone's making the New Year's resolutions for dieting, and they have this thing called the mono diet. Have you heard of this?
No, I haven't heard
Where you
of this.
literally just eat one thing every day for like 3 or 4 weeks.
What's
and
that
it
supposed
resets
to
your
do?
system. I don't know, but now that you mentioned beer and macadamia nuts,
I kind of did that in college.
I might actually give this a try.
Yeah.
Can't eat the beer, but you can eat the macadamia nuts.
A lot to aspire to there. Let's talk about Davos and the World Economic Forum. Of course,
Is that still a thing?
That is coming up
Where they
next
eat
week.
beer and nuts too?
Probably there's some beer drinking and you know, macadamia nuts over there.
What about
but
candy
let's
and
talk
nuts?
about what they're worried about, because there's an annual survey
Thanks
that
for
the World Economic Forum puts on every year. In the coming 2 years, the biggest worry on the top of their list is misinformation and disinformation. Of course, this feels super timely given what we were just talking about with the SEC and what happened on X yesterday. That is their biggest worry short term, followed by extreme weather events, which is interesting because you take a look at the long-term concerns 10 years out, and it's also extreme weather events. So there you go.
It makes a lot of sense, right? You know, here we are getting ready for another presidential election. We talked with the folks over at Eurasia Group, and their chief concern is the U.S. versus itself, and they're watching U.S. politics very closely and basically infighting and worried about kind of how this election comes out. And you do wonder how misinformation, it played certainly last time around, how it might play this time around. So it's something that we've got to kind of keep a close watch on.
Yeah, absolutely. And again, not to pick at old wounds, but I think given the incident yesterday with the hoax around that SEC release, it does get to the question here of how prepared some of these social media platforms are going to be for this.
We talked about that yesterday on our program, Romaine, after we found out that it was a hoax. I mean, the SEC getting hacked for something like this is one thing, but imagine, a nation state that actually uses X to communicate with people. I mean, this is the type of thing that literally could start wars. And
You've got to
I'm not
have
blowing it out of proportion.
two-factor authentication.
Yeah, I was about to say, why are we calling this a hack?
Yeah.
Because this was basically just somebody.
They guessed a phone number.
They guessed a
Good
phone
reminder
number,
for everybody to
which I think
two-factor
for the SEC
authentication
would probably be
on
publicly available. But
Yeah.
that's a whole nother conversation.
Do you think their password was welcome?
I think it was
Probably.
1, 2, 3, 4.
5.
It was
Password.
Gensler and his birthday.
All right, guys. All right, we're going to come back in less than an hour's time. Count everybody down to the close on this Wednesday. Our cross-platform radio, TV, YouTube, Bloomberg Originals. Join us at 4 p.m. Wall Street time for Beyond the Bell.
And we continue our coverage right here on Bloomberg Television, counting you down to the closing bell, just about 50 minutes away from those closing bells and just a few hours away from another big U.S. inflation report. Anders Persson joining us right now, Chief Investment Officer and Head of Global Fixed Income over at Nuveen. Great to see you here, Anders. And I do want to start off with inflation and more importantly, whether you think inflation and more importantly, disinflation is actually here to stay.
Yeah, thanks for having me. Yeah, no, certainly a key number tomorrow. And we're expecting to show another improvement in the core inflation trend. Consensus around 0.3% month over month, which is in line with our thoughts as well. And really the interesting part is going to be the composition. I think we'll see probably lower auto prices, lower apparel, kind of due to that holiday discounting and probably a little bit higher airfares. But we're going to be focusing more on the shelter side, the shelter inflation, and other core services, which did actually accelerate a bit in the November print. So that's the part we're going to focus on. And generally to kind of look into the rest of the year, we are forecasting inflation to continue to come down. Mm-hmm. We're expecting 2.75% by year end. And after that, it's going to be more difficult. It's that last mile that's the most difficult side. But certainly things are moving in the right direction. And then obviously the Fed's going to be very focused on this number tomorrow.
How do bond investors, though, position around it? Because at this point, this is now a bit of a guessing game as to the direction of rates, but more importantly, the severity of that direction.
Yeah, I think bond investors are certainly going to keep a close eye on it. But I think the investors are also really starting to look in a little bit more around the economic slowdown and maybe shifting a little bit its focus away from inflation, which was very, very key, obviously, for 2023, getting a little bit more comfortable we're moving in the right direction there, and spending probably a little bit more time just assessing what the economic slowdown would look like. I mean, we're expecting the economy to be slowing down this year. We're seeing kind of a full year GDP, real GDP around 1% for the full year this year. So certainly slowing down, but not, concerning enough to be calling sort of a hard landing or a recession. We're in that soft landing camp. And I think investors are increasingly shifting maybe a little bit more of the focus away from inflation to basically seeing how the economy is holding up and the job market as well. They're all kind of tied in at this point, obviously.
Well, let's wrap that into what that means for the bond market. If maybe the Fed can shift their focus away from inflation, maybe bond investors can too. And with that in mind, where's the opportunity when you look across the bond market, when you look across the curve, for example?
Yeah, maybe I'll start just kind of on the bond market as a whole. I would say we're still quite constructive on fixed income going into this year. Obviously, we had a very, very nice rally late in the year and very solid returns for 2023. But as we're looking at sort of the yield environment, first and foremost, it's still very attractive, very interesting, significantly more exciting than we've seen for quite some time. And fixed income returns is primarily coming from income generation, and that's something that you're going to be able to see here in 24 as well. In addition to that, we do think that the rates backdrop should be more stable going forward. Now when we're wrapping up the hiking cycle, the Fed, the central banks, and what have you, we do think that that should be a better backdrop for yields and ultimately for fixed income as a whole. And then finally, having more of this risk reward, we do think fixed income is well balanced from a return perspective, particularly if you compare it to other asset classes. So that backdrop is quite positive going into 2024. So all in all, we're seeing a lot of interest in fixed income investors. I think all in all, we're also getting more comfort in moving further out on the duration curve. To your question, we're sort of short duration for most of 23, became more neutral kind of duration second half of the year. Now we're looking to become a little bit more comfortable moving further into duration overall. So a number of moving pieces here, but all in all, a backdrop for fixed income for the year.
So comfortable moving out when it comes to duration. Are you comfortable moving out the risk curve as well?
No, I would say probably a little bit, more moving up in higher quality segments within individual asset classes. That really comes down to this, expectation around economic slowdown kind of coming our way, so to say. And quite frankly, if you look at spread levels, they're on the richer end at this side, at the very least, sort of fully valued, I think we can argue. So we could see some spread widening here as we're moving closer to that economic slowdown perspective. That being said, we're still finding opportunities even in, below investment grade. For instance, senior loans has underperformed a little bit here in Q4. High yield performed incredibly strongly in Q4. So we're finding some opportunity on the senior loan side. Securitized is a very broad space in fixed income, and that's another area that we're finding some interesting opportunities. So really kind of pushing diversification and making sure you're approaching this from an active management perspective.
All right, Anders, really appreciate the time. That, of course, is Anders Persson. He is Chief Investment Officer and Head of Global Fixed Income over at Nuveen. Now, coming up, with the SEC expected to make a decision today on spot Bitcoin ETFs, we'll talk with Dennis Kelleher. He is co-founder and CEO of Better Markets, why he says the ETFs should not be approved.
And plus, a closer look at Amazon and its layoffs over there, particularly in the Prime Video and Twitch businesses. What's behind that move?
And the longest tenured coach in the history of the Miami Heat is going to extend his record.
Who's that?
It's Eric Spoelstra. I hope did I say his name correctly? Great. It's going to be a great interview. We're going to talk about how many millions of dollars all that is worth. All that and more coming up. This is The Close on Bloomberg.
New York Fed President John Williams speaking right now on the economic outlook for 2024. Michael McKee, our chief international and economics correspondent, joining us right now for more. Mike, what do we know?
Well, Roman, John Williams stirring the entrails a little bit, not making a lot of news, but basically saying that the Fed is done raising rates, that rates are restrictive enough to bring inflation down to its 2% target. But he adds, we're not there yet. And so we need to keep rates high for some time, in his words. So Williams echoing some of the optimistic talk that we've heard from some Fed members about rate cuts, but not ready to subscribe to that, not ready to suggest it's going to happen, says they've got to have more evidence before they can consider cutting interest rates. He does push back on Dallas Fed President Lori Logan's assertion that it's time for the Fed to start thinking about slowing or tapering QT, saying we're not near that point yet. Now, that'll be a kind of interesting discussion point because everybody looks to Logan as sort of the expert on the balance sheet since she ran the open market operations at the New York Fed. Williams appears to disagree with her about when they are going to be able to start tapering that. But the basic message is that the Fed is not yet ready to start talking about cutting rates. Williams, of course, is seen as a sort of reflection of what Chairman Jay Powell is thinking.
Yeah, it was the balance sheet discussion that caught my eye. Just to reiterate there, Williams saying that the Fed doesn't seem close to the point of slowing asset runoff. You contrast that to what we heard from Lori Logan saying that policymakers should begin at least discussing slowing that. What was the basis of her view there?
Well, her view is that we are getting close to the point where the Fed is going to want to stop QT because you're going to have ample reserves. You don't want to go below that level, and it will cause problems for the plumbing of the system if you let the reserves level fall too far. But nobody quite knows where that is. So there's going to be disagreement among members of the Fed about when they should do that. It's also kind of hard to parse exactly what both sides are saying in that they had a briefing by Fed staff at the last meeting on the balance sheet. So when do you start, quote unquote, talking about it? When the staff is talking about it or when you actually put a plan on the table? That's not clear.
All right, Michael McKee here leads our economics coverage here at Bloomberg. The headlines coming out of New York Fed President John Williams saying that monetary policy here in the U.S. now tight enough to guide inflation back down to that 2% Fed target, but not enough evidence, at least not now, to start talking about cutting interest rates. I want to pivot from the macro story and go back to what has been the big story over the last few hours, and that is the SEC here in the U.S. and the expectation that it will announce a decision on spot Bitcoin ETFs. Of course, that decision, which is expected to come today, follows what turned out to be a hoax announcement yesterday, a hack of the SEC's account on the platform X that led to a false announcement that the approval had already been granted. Whatever happens, there's still a lot of concern out there about whether having spot Bitcoin ETFs carries with it an extra and outsized element of risk for investors. Our very own Eric Balchunas at Bloomberg Intelligence says some of the calls to reject the ETF applications because of concern about the risk of retail investors is overblown. He makes the point that right now retail investors can already get exposure to crypto in a multitude of ways that are way more flawed than any regulated exchange-traded fund. Our next guest, though, begs to disagree. Dennis Kelleher joining us right now. He's the CEO of Better Markets. It's a nonprofit focused on financial policy. All right, Dennis, let's start there here. When we talk about the potential addition of risk for investors who maybe gravitate to these ETFs here, is there something materially different between the risk they would face after an approval of an ETF relative to what they have now in trying to acquire Bitcoin or any crypto asset?
Well, the risks they face don't change. People need to remember that no matter what the SEC does today, we're talking about a fundamentally worthless financial product. Tomorrow and yesterday, Bitcoin will still have no legitimate use. Yesterday and tomorrow, it will remain the preferred financial product for speculators, gamblers, and criminals. It will still be a cesspool of fraud, manipulation, and criminality. And you don't have to take my word. I mean, we put Better Markets detailed study after study in the letters and discussions with the SEC. There's a comprehensive study of 29 exchanges, for example, that showed that as much as 77.5% of the total trading volume of unregulated exchanges was due to wash trading. Yeah. That's going to continue. The other thing that's going to continue is no effective cop on the beat. So the CFTC is supposed to be the one monitoring the spot Bitcoin market. Right. It's got a tiny budget. It's understaffed. There's no cop on the beat there. Those things are not going to change, and those are going to threaten many, many more investors.
Well, let me ask you why that wouldn't change. I mean, wouldn't just the default of having a regulated instrument to have this put the onus on regulators to actually step up to the plate? I mean, they can't just approve this and then step back and say, okay, you're all left to your own devices.
Well, one would think that, and Romaine, you put your finger on it. That's exactly what investors are going to think. They're going to take false comfort in thinking the SEC approval and probably interpret that as a de facto approval of crypto and Bitcoin itself rather than just the ETF. And they're going to think, well, they would never do that without having investor protection and the proper regulation. But that's not true. The ETF itself, which will be regulated by the SEC, will in fact be regulated. But that's only the vehicle that's being used to make crypto much more available to investors. The underlying spot market, however, is where the trading happens, and all the prices on the ETF is going to be based on the spot trading. The spot trading market is not regulated. There's no effective cop there. That's where the fraud is. People need to understand that they're not buying a crypto token. They're literally buying a chip that you would get at a casino. This is not an investment that anybody usually gets. As to Eric's point, Romaine.
Hey, Dennis, actually, we're up against a break here. Apologies for cutting you off here. We will check in with you very soon again, I'm sure. Dennis Kelleher over at Better Markets as we await that potential decision by the SEC on a spot Bitcoin ETF. We'll be back in a moment. This is Bloomberg. About 7 of the 11 S&P sectors in the green right now with about 35 minutes until the closing bell. A look at the NASDAQ 100 and you have about half the members in the green, and it's all the ones that you want to see up there. Katie Greifeld, Microsoft up 2%, Meta up about 4%, Nvidia up about 2%.
You add it all together, you're looking at the S&P 500 up by about 0.5%. You take a look at the bond market right now, 10-year yields up slightly, a little bit above 4%, but it really feels like we've been glued to 4% for a few weeks now.
Yeah, absolutely here. And of course, all eyes right now on what's been going on in the crypto sphere. Bitcoin hovering around just below that 46,000 level as we await Katie Greifeld. Do you think it's going to happen?
I don't know.
Don't jinx it.
We'll find out soon.
If it happens, you're going to hear it here first. That's for sure. Right here on Bloomberg. This is the countdown to the close. Just about 30 minutes left to go here, Katie, in the trading day.
And you're taking a look at a green day for the S&P. And if you take a look at the sectors, most of them higher as well. Definitely more green than red on the screen behind me. Led by communication services, up by about 1.1%. Followed by consumer discretionary, also up about 0.9%. Tech as well, having a pretty good Wednesday. You look down the list, what's not doing too well. Consumer staples, materials, both off slightly, and then energy having another bad day, off by 1.2%. That would be the third day of losses, Romain.
Yeah, well, let's take a look at, I guess, some of the bright sides out there. Home builders actually doing well today. Lennar up about 3%. At one point on the day, it was actually trading at a record high. This on the back of a buyback authorization. We should point out, we are expected to get earnings out of KB Home a little bit later tonight. So keep an eye on the home builder space, which of course has been, at least the stocks have been one of the big bright spots here for the market over the past few months. Meanwhile, iRobot taking a huge leg down just over the last hour or so, down about 20% here. This after a filing deadline. This is the filing deadline over in the European Union for Amazon to submit its remedies in order to close the acquisition of iRobot. Bloomberg is reporting that apparently Amazon skipped that deadline. We don't have a lot more information about it, but what we do know as of right now here, late in the evening over there in Europe, there has still not been a remedy filed. Investors getting spooked by that. Investors also spooked by an interesting note out over at BMO Capital that suggested that we're headed for an interesting down cycle in credit. You combine that with economic conditions that are a bit worrying for some folks here. That led to a downgrade of a lot of financial stocks, including Capital One and American Express. American Express cut to underweight. And of course, all eyes right now on the crypto universe. Katie Greifeld, Coinbase down about 1% on the day.
Well, on that topic, let's get back to Bitcoin because the Chamber of Digital Commerce is calling for a congressional hearing on yesterday's breach of the SEC's X account. Now, in a letter to lawmakers, the group said, quote, this incident has caused investor harm and questions the robustness of the SEC's cybersecurity measures. It also casts a shadow over their role as an effective regulator. Joining us now is Perianne Boring. She is the founder and CEO of the Chamber of Digital Commerce. And let's talk about that a little bit more. What would you want to hear should a hearing actually go and take place?
Yesterday's event was totally unprecedented, probably preventable, and it led to a lot of harm. Over the course of just a couple of minutes, there were over $90 million worth of liquidations yesterday. There was true investor harm due to this cybersecurity, social media incident, and it's absolutely critical that we get transparency and real answers. Congress's job is to oversee the SEC, and we fully expect Congress to exercise their oversight powers in this very unfortunate incident yesterday.
And so, of course, that was yesterday. Today, of course, we're expecting the actual decision there. Talk to us a little bit about what this would mean for the industry. Obviously, this is something that's more than a decade in the making. At this point, if you wanted Bitcoin access, is it safe to say you would have found it by now? How important will this Bitcoin ETF actually be?
This is an incredible and historic moment for Bitcoin for a number of reasons. For one, it took 10 years to get here. For over 10 years, Bitcoin funds have been working to bring spot Bitcoin ETFs to market, and they were blocked for over a decade. It literally took the industry taking the SEC to court. The industry won, which really paved the way and forced the SEC's hand for the approvals that we're expecting today. So just to overcome that incredible journey of the SEC being charged with being arbitrary and capricious and really bringing to light that they've discriminated against Bitcoin as an asset class is one important victory. But also what's so important about spot Bitcoin ETFs is it allows for Bitcoin to be accessible to so many more people. ETFs are one of the most popular investment vehicles for both retail and institutional investors. Over $7 trillion are invested in ETFs currently. Now people will be able to get exposure and be able to allocate to the best performing asset in the market today, and doing it with the support and the advice of their financial advisors. Because we did not have publicly listed spot Bitcoin products, investors would have to navigate this interesting and different world of cryptocurrency on their own. And now they will be able to be guided with the financial advisory, which is so critical for mainstream mainstream adoption.
So, Perrianne, I am curious about what comes next here. I mean, we obviously know the dozen or so applications out there right now that we're at least anticipating will probably be approved alongside ARK and 21 shares. Do you anticipate, A, that we'll see a material increase in filings post whatever decision we get with the assumption that this is approved?
What we expect to see over time as these publicly listed products, spot products, come to market is that the financial advisory will now be a part of Bitcoin. They will now be incentivized to understand how these products work, how Bitcoin works, how the technology works, and to advise their clients on how to allocate best in their portfolios. So over time, we expect to see very large demand on Bitcoin because it is the best performing asset. It was up over 150% last year. It has been the best performing asset in the market 11 out of the past 14 years since its inception. So we fully expect to see a lot more people to become truly educated and empowered to invest in Bitcoin. And this also will pave the way for additional cryptocurrency ETFs over time.
What's the differentiation, if at all, that we see, or does that not matter in terms of the different products?
Well, Bitcoin is very different than other cryptocurrencies. We already have ETH futures ETFs that are trading and ETH futures that have been trading for years. So the next ETF that we would expect to see would be a spot ETH ETF. Ethereum is very different than Bitcoin. Bitcoin is digital money. It's peer-to-peer money. Ethereum is a smart contracts platform. Ethereum also has a lot of competitors. There's many other smart contracts platforms that are all vying to be the key platform. Bitcoin, as digital gold, has won that application, has the lead market cap, and will always be in that winning position. So they serve very different technical roles, but also very promising.
Perrianne, I do want to get a little bit philosophical here and just zoom out a little bit, because you think about some of the original promises of crypto, getting away from governments, decentralization, going bankless, and I don't know, it seems like there's a certain irony that there's so much hype and hopes and dreams pinned to the fact that maybe we'll get spot Bitcoin ETFs. It feels in some ways that it goes against the original mission of crypto.
ETFs are very different products than just buying Bitcoin directly. Until spot Bitcoin ETFs are approved, really the only way to get exposure to Bitcoin is to invest in it directly. However, because Bitcoin is secured by cryptography, in order to invest in it directly, you have to understand how asymmetric cryptography works. You have to understand how to protect your private keys, becoming your own custodian. That is a feat that some people don't necessarily want to overcome, or that's just too big of a hurdle for some investors. So having a financial product that's listed on a publicly traded stock exchange where you don't have to worry about things like custody, this is going to allow different people to have access to it. Are there pros and cons to an ETF? Absolutely. Are you self-custodying? No, you're not. Self-custody brings a whole other set of benefits, but also risks. So we think in a healthy ecosystem, in a healthy marketplace, you need different types of products for different types of investors with different types of needs.
All right, Perrianne, got to leave it there. Really appreciate your time. That is Perrianne Boring. She is Chamber of Digital Commerce founder and CEO. Now coming up, it's the top three, where we focus in on the top three movers and shakers at the center of the day's biggest stories. That's next. This is The Close on Bloomberg. All right, it's time now for the top three. Every day at this time, we do a deep dive into the people at the center of today's top stories. Joining us now is Scarlett Fu. Scarlett, who are you watching?
I'm watching the head coach of LeBron James's Miami Heat, Eric Spoelstra. He reportedly signed the largest contract
LeBron James's
in NBA
Miami
history.
Heat.
Yeah, I mean, that pretty much is what it is, right?
Okay.
Let's call it for what it is. He signed an 8-year extension worth $120 million. This is his 16th season as head coach of LeBron James's Miami Heat, 29th season with the franchise, so predating LeBron.
I'm sorry, was he traded back to Miami?
No, he's been with Miami this whole time. He started off in the video room, and then he moved.
I'm talking
up to
about
be a
LeBron
scout.
James.
Oh, LeBron, yes.
Okay, because I think there are some folks on the other coast that would take issue with this being LeBron James' team.
Well,
but
more recently.
why is he getting a 10-year contract?
Because the Miami Heat puts a premium on stability, and he's done pretty well. I mean, he's taken them to NBA championships, yes, with LeBron James, but, he's been a source of stability for the team and a franchise.
Okay, I just wanted to check. He's still in the Lakers uniform. You threw me off there for a second. I was like, I haven't really kept up on sports.
For a while, how about that?
All right. You know who I'm watching, in all seriousness, Dave Calhoun, the CEO over at Boeing, of course, has been on the hot seat. He spoke at a company-wide meeting yesterday about the incident on that Alaska Airlines flight. Let's take a listen.
We're going to approach this, number one, acknowledging our mistake. We are going to approach it with 100% and complete transparency every step of the way. We're going to work with the NTSB, who is investigating the accident itself to find out what the root cause is. I have a long experience with this group. They're as good as it gets.
And we should point out, he got kind of emotional. This was an all-hands-on meeting with employees where he started talking about his kids and his grandkids and really just saying that this stuff really matters. And, we talk about seeing the images of that door, or whatever that thing was called, come off the fuselage. And the fact that no one was seriously injured or killed is almost just a miracle.
Yeah, it is amazing, and definitely a mea culpa from Boeing CEO there. Of course, this story is continuing. You think about those inspections that have been ordered. Alaska Air, United Airlines have both discovered loose bolts on some of those other 737 MAX 9 jets. But let's move on. Let's talk about number 3 here, because I'm keeping an eye on Diego Megia. He is the Millennium Management senior trader. He's on track to kick off his own hedge fund with a pool of as much as $5 billion. Now, according to people familiar with the matter, $3 billion of that would come from Izzy Englander's Millennium, the rest coming from external investors. And I wonder how many stories like this we're going to see. If we really do see some of these markets come back to life, maybe we're going to start seeing big hedge fund launches as well.
Well, this is also a popular way for these multi-strategy hedge fund giants like Millennium to spread out their investments as their assets increase. And Millennium's assets have increased quite a bit.
Yeah, absolutely. And then isn't Bobby Jane also starting his own firm or something like that here? So, yeah, these folks are going off to bigger and better things. And at least based on the money that you mentioned that he got out of Izzy Englander, apparently it is going to be bigger and better. Yeah. All right, a lot more coming up here on The Close. We are counting you down to those bells. 14 minutes to go. Standing in the wings, Larry Adam, Raymond James, Chief Investment Officer for Private Client Group. That's coming up next, right here on The Close on Bloomberg. This is the countdown to the close. I'm Romaine Bostic alongside Scarlett Fu. 10 minutes, Scarlett, until we get to those closing bells. We had a pretty strong rally earlier in the day, but a lot of those gains being given back as we get closer to that bell.
Yeah, some modest moves when it comes down to it with 10 minutes to go before the closing bell. Big tech is leading the charge in stocks while treasuries are falling all before the big CPI report. I'm not sure that we learned anything new from New York Fed President John Williams. It's kind of higher for longer, no rush to cut rates.
Yeah, it was kind of more of the same song. Basically, hey, we're in a good place, but don't expect us to start cutting rates anytime soon.
And of course, we're waiting for any kind of announcement from the SEC on Bitcoin. The price of Bitcoin, of course, has been moving around. It is rising right now in anticipation of that decision. The biggest Bitcoin futures ETF, BITO, is down about 2.7%, presumably because holders of BITO would switch to a spot Bitcoin ETF once that becomes available.
All right, we are on watch for a decision by the SEC. We will bring you that as soon as we get it. But let's get right back to the broader market with those closing bells now just 9 minutes away. And Larry Adam joining us on set. He's Raymond James's Chief Investment Officer for Private Client Group. Larry, great to have you here on the program.
Thank you for having me, boss.
Coming off of 2023, that I think defied a lot of expectations to the upside. That was a good thing, I guess. Absolutely. But of course, everybody wants to know those gains that we saw in 2023, is there sustainability now deeper into this year?
I think we have further gains for this year. I just think they're going to be a lot more muted than what we saw last year. In fact, our target's 48.50, which as we approach record highs here, it's not that far from here.
Yeah.
But I think that's because we have to digest what we did last year. At the end of last year, we rallied for 9 consecutive weeks.
Yeah.
So I think we just have to digest that.
So what does an investor do right now for those folks who are trying to either reposition, maybe enter the market, assuming they sat out a good portion of the rally last year? Are there areas that look more attractive to you than others right now?
I think selectivity is important, and the three sectors that I continue to like, you talked about it earlier. I like technology. I think a lot of people think it's expensive.
Yeah.
I actually disagree with that.
Why?
You know, if you look over the last 2 years, the Nasdaq's actually down 4%. Earnings are up 8%. So by definition, valuations are, you know, better, more attractive than they were 2 years ago. And I think what people fail to realize time and time again, if you look at the earnings and for technology companies, they beat consistently quarter after quarter after quarter. I start to apply that to the earnings, the multiple comes down. So I think they're attractively priced. I like healthcare. I look for a bounce back year. And by the way, that's the sector that's expected to have the best growth this year. That'll drive those earnings.
Yeah, but when you say healthcare, I mean, you're not talking about the whole basket. Are there specific pockets? Are we talking like health insurers? Are we talking pharmacies? Are we talking med devices? What?
I look at the entire sector because I think it's a sector that can be both offensive and defensive, right? And I think that's going to be critical this year. If you think about it, over the last 5 years, second best earnings growth. However, it's the third least volatile sector. I think with increased volatility this year, it's in the ideal spot to ultimately do better. And then the third sector I like is industrials.
Yeah.
And that's something that we've heard from last year, industrials, is kind of a carryover from 2023. I want to go back to healthcare for a moment because we are seeing M&A in that sector, quite a bit of it as well. Is that more of the offensive nature or defensive nature?
I think it's looking at valuations right now, and with valuations being discounted from where they were, it's one of the cheapest sectors right now in the market. I think people are looking at that at value, and in an environment where top line revenues are going to be challenged this year, I think that's where you get some of that top line growth. So I would expect that to continue as we go further into this year.
Okay, so what about the weight loss drugs, the class of weight loss drugs, and how they kind of divide healthcare into, you know, two different universes? You've got the companies that make those drugs, and then you've got everyone else. How do you think about the everyone else part of it?
I think there's more than just obesity drugs when it comes to that. I think that's one of the drivers of the sector. I think there's other drugs that are on the horizon, whether it's helping people with cancer, whether it's Alzheimer's. Just the sheer fact that if you look at the average American, we live to be 79 years old. So healthcare needs are only going to continue to increase as we go into the future. And as I said, best earnings growth this year, margins, that's an area I think margins can expand. And I think that'll be a place where you'll be rewarded for being in.
Well, what about kind of that small cap cyclical trade that started to pick up a little steam towards the end of last year? I know it's kind of petered out over the last couple of weeks here, but do you see any sort of hope that we'll see a material rebound in some of those stocks?
I do like small caps for this year. When I look at valuations, it's trading at a significant discount. That doesn't necessarily mean it's going to rally, but I do think that there's catalysts that can unlock the value. And if you look back historically, we think we have a mild recession. Coming out of a recession, small caps tend to outperform.
You think we're going to have a mild recession this year?
I think it's going to be mild, second and third quarter. Probably the mildest we've ever seen, to be honest. But coming out of recession, they tend to outperform. When the Fed cuts interest rates, that's a market capitalization that tends to outperform. And then when you look at just the sheer size of that versus the large big cap stocks, it doesn't take much flows to really get those stocks moving. And the sectors that I mentioned, you get a lot of exposure there.
If we broaden everything out a little bit and just look at asset allocation, not just equities, but also cryptocurrency with the spot Bitcoin ETF possibly getting approved today, some analysts are predicting these products could see as much as $100 billion in inflows by year end. Where would that money come out of? Where would it come from? Are we talking about high yield money market accounts? Are we talking about equities? Are we talking about something else?
So I would hope it would come from the most speculative part of people's portfolios, because cryptocurrency obviously has a lot of volatility around it. I hope if people are looking for, cash-like investments, they're not pulling it from there. But I hope it comes from the more volatile sector. I think if you look back historically, that's a pretty high correlation, for example, to the NASDAQ, right? So I would take some of my exposure from that part of my portfolio. I wouldn't, again, I would be very careful with the risk of those investments.
What kind of questions are you fielding from customers, from clients about it?
When it comes to crypto?
Yeah, the Bitcoin ETF.
So for me, it's a tough investment, right? Because I'm a fundamental analyst. We were talking before this about being a CFA.
Yeah.
I don't really know how to value it. So it's really trouble. It provides me with a lot of trouble coming up with a valuation of it. It's really built on momentum.
Yep.
And how many times have we been burnt in the past when momentum stops?
Yeah.
Right? It can fall very quickly. So I actually tell people, if they're going to put it in their portfolio, small piece of your portfolio, don't overdo it. And it's really the money that you can afford to lose longer term.
Do you think, though, you're going to be fielding more requests, given that now that it's easier to actually make those transactions with an ETF, assuming it gets approved?
I think that's part of our job, right?
Yeah.
When these things move the way they're moving in anticipation of what could happen, I think we're going to field those questions, but we got to make sure that in the end, we keep clients' asset allocations consistent with their risk-reward profile.
All right. Well, you've been doing a good job in guiding the private client group and whatever clients are baked into that over at Raymond James for the last few years. Larry Adam right here on set helping us count down to those closing bells. Scarlett, just 3 minutes away here. Stocks still where they've been now for the last few minutes, with the S&P up about 0.1%. The Russell now dipping into the red.
And of course, we're waiting for the CPI numbers to come out tomorrow and PPI after that. But in the meantime, we're also on the lookout for any headlines, hopefully not just from social media, on the Bitcoin ETF.
Oh, Scarlett, don't pick at old wounds. Where were you yesterday? Oh, you were here right next to me.
Yes, we were sitting right here.
That's right. Yeah, we had a wild ride yesterday, but of course, our diligent team here at Bloomberg is all over this, and we'll bring you that coverage as soon as it happens.
We've got wall-to-wall coverage of it.
As soon as it's confirmed directly from the SEC.
As soon as they make a decision. How about that? Why don't we go with that?
That is right. All right, stick with us. We got a lot to cover here as we move closer to these closing bells. Our full market coverage right here on Bloomberg as we take you to the bell and beyond.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell and here to help take us beyond the bell. It's a global simulcast with our friends Carol Massar and Tim Stenovic. A welcome to our audiences across our Bloomberg platforms, television, radio originals, and our partnership with YouTube. A lot to parse today here with market moves in equities. Of course, a big anticipation when it comes to dare I say it, a Bitcoin ETF.
I'm kind of glued to my terminal and just kind of also feeling like, okay, can I believe it when it happens?
Yes, you have to believe. There is a Santa Claus, Carol Massar.
I know there is. I love Kris Kringle. Having said that, we are kind of glued to it on expectations that this is the day that it comes down. It is expected to come. It's important for certain members who have filed for these spot Bitcoin ETFs. Having said that, I'm also glued. I've been watching the 10-year, guys. It just stays at 4% here for the most part, it feels like.
Also worth taking a look at Bitcoin bouncing around a little bit. It is up 1.4% as we speak, over that $46,000 level. We saw some movement yesterday, but you know what I kept hearing before the announcement that ended up being a hoax yesterday came out? Everything was priced in.
Yeah, I look at BITO, which is the ETF that tracks Bitcoin futures, down today in anticipation of this decision. Of course, it would be seen as a potential loser here once an ETF is approved.
Yeah, absolutely here. And of course, we are on alert, waiting to actually get word on that here. Let's go back to the broader markets, though. Right now, we talk about an S&P 500 clawing its way back into the green. And in fact, as we get the closing bell, it looks like all of the major indices here in the U.S. are going to finish the day higher than where they ended yesterday. On this Wednesday afternoon, the Dow Jones Industrial Average up about 160 points as we wait for these numbers to settle. No matter how they settle, that's going to be good for a gain of roughly about 0.4% here on the day. The S&P 500 up about 0.6% or about 27 points. The NASDAQ Composite clocking in with a gain of about 112 points or 0.8%. And the Russell 2000, which had been oscillating between gains and losses, looks like it's going to end the day with a gain of 0.1%.
All right, so digging a little bit deeper into the S&P 500 specifically, almost an even split, but a little bit of the tone to kind of the risk on trade. 276 names gaining in today's session, Scarlett, 225 to the downside, and we've got 2 unchanged.
Yeah, the definite bias to the upside if you look at the sector breakdown in the S&P 500. Your 3 best performing groups: retailers, software companies, media and entertainment. On the downside, you've got energy, food, beverage and tobacco, and auto companies.
All right, let's get to some of the individual gainers in today's session. Meta, seeing that among the top gainers in the S&P 500 and the NASDAQ 100, up about 3.6%, hitting a 52-week high in today's session. Bond trading, by the way, also jumping to more than twice its average. So a lot of activity on both the equity and bond side of that company. Mizuho Securities raising its price target on the company to $470 from $400. Stock closing at $370 and change. They talked about 3 catalysts specifically, including a conservative consensus for sales growth, expectations of guidance on operating expenditures going down over the fiscal year. And then they talked about WhatsApp messaging could increase the revenue base by a third by using AI to automate customer service. They did maintain their buy rating on the stock. All right, another gainer that was top in the S&P and the NASDAQ, and I think...
Have you ever tried to use customer service with one of those AI bots?
I've never done it with an AI bot.
Because you said that as if somehow we should all be cheering that.
I've done it. I've been doing it with actually real people, and it's it actually works a lot better, I found.
With real people, yes.
Yeah.
Fancy that.
Someone who can actually listen
the
to you
chat versus
and answer
waiting
your
on the
specific
phone.
question. Yeah.
Do you say, give me person, give
no,
me person?
I do it through
Just press
websites and apps
zero
now. I
like 20
mean,
times.
some airlines,
exactly.
it's much better for airlines instead of waiting on hold for 90 minutes.
I want a human. I want a human. All right, this is
just rolled over.
number one gainer in the S&P 500 and the NASDAQ, guys. Intuitive Surgical, ISRG is the ticker there. Company rallying. Blah. The medical equipment maker reported preliminary revenue for the fourth quarter. It beat the average analyst estimate. Brokers praising the solid results and strong outlook for 2024. So you saw that stock up more than 10% in today's session. And then Palo Alto Networks, also a top gainer in both the S&P 500 and the NASDAQ 100. Citi and Morgan each raising their price target on the stock. Citi to 335 from 280. They've got a buy rating. Morgan Stanley to 375 from 304. They maintain their overweight. You can see the stock closing at just about $16 there.
All right, well, let's talk decliners because we continue to follow the fallout from the almost mishap on Friday evening of that Alaska Airlines flight. Alaska Air Group, the parent company of Alaska Airlines, down 0.8%. This after the company said earlier today that it would ground all flights by the 737 MAX 9 over the next 3 days. So continuing that grounding, it's waiting instructions from Boeing and U.S. safety regulators on inspections. So what this means for people who are flying, 110 to 150 daily flight cancellations. That's according to a statement from Alaska Air Group. American Express falling on the day today. Analysts at BMO Capital Markets cut a handful of banks, including American Express, also some specialty financial stocks, arguing that they looked, quote, vulnerable to higher capital requirements in a looming credit cycle. Amex got downgraded from market perform because of concerns over factors such as credit quality, reserve adequacy, rising consumer engagement costs, and valuation. We should note that Capital One, Ally Financial, Goldman Sachs, Citigroup, and a couple others were reduced to market perform. Amex was up 29% last year. And here's an interesting one. We talked about Mark Zuckerberg and cattle and steak a little earlier, okay?
Yeah.
Tyson Foods ended up falling on the day today. I want to check in on shares of the company because it is one of the biggest beef packers here in the U.S. Cargill and Tyson had to idle a couple Kansas slaughter plants as blizzards swept through the region earlier this week. Tyson canceling a couple shifts at a plant in Kansas. And for what it's worth, the number of cattle slaughtered in the U.S. fell yesterday to 94,000. Compared with 128,000 a year earlier. That's according to the U.S. Department of Agricultural data. It's the lowest weekday total so far this year.
All right, let's check in on what's happened in the bond market, and not a whole lot here. A bit of a holding pattern ahead of a big U.S. inflation report scheduled for tomorrow morning. The entire yield curve did shift higher here on the day, but modestly, as you can see, barely a basis point there on the 2-year, not even a basis point, and about 2 on the 10-year yield here. And we should point out that we've actually seen a lot of traders going back into some of those short-term hedges, trying to protect themselves against the potential for an increase in rates here. The idea here that maybe the economic data is working against that narrative that we should be expecting multiple rate hikes this year. And of course, that is the setup, guys, for a big announcement, potentially 8:30 a.m. Washington time. I think that's going to happen, and I don't think it will be a hoax. That is the latest CPI inflation report.
Don't jinx
and
I can't do another hoax, man. That was exhausting.
Yeah.
It's rough.
And if you believe Bloomberg Economics, they say we're still on track here. We had comments earlier from John Williams at the New York Fed, says he thinks rates are in a good place, but he also made it clear that there's really no impetus for the Fed to start cutting anytime soon.
Yeah, so we're going to have to get a couple months data to really kind of see a trend forming. It's really remarkable how there was so much conviction at the end of the last year when you look at the bond market, and that seems to all have dissipated at the start of this year, even though the big picture hasn't really changed all that much.
Yeah, and I do wonder if we have to start counting in terms of how many times we start to see kind of the key inflation metrics that the Fed closely watches, that it actually is below 2% or at 2%, that it's not ticking higher. Steve Matthews, was it last week or so, Tim, said it's got to be about 6 months. So, folks, we're going to have to be patient here before we start to see a U.S. central bank that maybe starts to actually cut rates.
Well, analysts surveyed by Bloomberg expect so-called core CPI tomorrow to come in at 3.8%. Romaine, Molly Smith was on with us a little earlier, and she reminded us that it's been over 2 years since we saw that number come in below 4%.
Yeah, absolutely. And look, I mean, the trend line's been down, and this is what the Fed has been telling us for a while. I know it may not be at that 2% target here, but you just overlay all these monthly reports here, and you can clearly sort of draw a straight line. But it gets to the question, too, whether investors have moved on. I mean, I know that this is still a big trade in the fixed income space, but a lot of equity investors seem to say, look, this isn't a big concern. And we were talking with, was it Katie Greifeld a little bit earlier about kind of what's sort of top of mind at Davos. That was with you guys, right?
Yeah.
Okay, I couldn't remember. I don't know. You know, we have
Hours
so many.
melting into
we
one
have so many.
another.
But where was inflation on that list? It was all about fake news. It was all about geopolitical issues, and inflation was like 8th or 9th on that list.
Yeah.
Well, I mean, it's another data point.
If the Davos elite don't care, should I?
Well.
Do they?
Where do you want me to go here?
Yeah,
Because
exactly.
there are a lot of places I could go. I mean, we could talk about how inflation really affects people who, make a lot less money than folks who are going to Davos. But you raise a good point, Romaine, that, maybe the hard work with taming inflation is done, although I think many people would argue that it's the so-called last mile, getting it from 3% to 2%, or getting from even 3.8% to the Fed's 2% goal, at least with PCE. That is the hard part. So.
Yeah.
And we still don't have the answer on whether the Fed will be content to see 2-ish or just kind of approaching 2, or it has to see an actual 2 handle.
Yeah, look, that was a bunch of questions, guys. So it's not easy, I think, when the Fed navigates as it gets to the end of this. All right, that's a wrap on this Wednesday as we continue to kind of watch for any headlines here after the close involving the SEC approval of that spot Bitcoin ETF. We're just kind of waiting. Anyway, a wrap. Radio, TV, YouTube, Bloomberg Originals. We'll see you all tomorrow.
And stick around, a lot more coverage coming up, including awaiting potentially that announcement by the SEC, as well as the conversation about what's going on in the fixed income space. Alex Petrone, Director of Fixed Income over at Rockefeller Asset Management. She's going to be joining us right after the break. This is Bloomberg. Welcome back to the close. Another interesting day in markets. Equities as a whole across the board did move higher. We also did see a shift higher in the yield curve as those financial conditions continue to loosen ahead of what could potentially be a big inflation report tomorrow morning. We are getting some earnings crossing the wire here after the bell. In fact, 2 interesting individual stock stories after the bell here. First on KB Home. Those shares down about 3% here in after hours trading after reporting earnings. Deliveries in the quarter did come in above expectations here, but did see a little bit softness in other areas. EPS came in at $1.85 on the back of $1.67 billion in revenue. And the company is saying that it does see housing revenue for the full fiscal 2024 year at $6.4 to $6.8 billion. The top end of that range is well above the average of analyst estimates. So the bottom end of that range would come in below. And just real quickly, Scarlett, keep an eye on ChargePoint. Those shares at one point were down about 8-9% in after hours trading on the back of an announcement that it's cutting its workforce by about 12%.
All right, so we'll continue to monitor any kind of company headlines. We're also, of course, monitoring headlines for any kind of news on the SEC approval of Bitcoin ETFs. I look at what's going on in the bond market, and it's not a whole lot going on. The 10-year yield, for instance, pretty much stuck at the 4% level. Over the next several weeks, we know that governments saddled with debt will start flooding the market with bonds in order to finance their 2024 spending plans. For more on this, let's bring in Bloomberg Intelligence Chief U.S. Interest Rate Strategist Ira Jersey. And Ira, this was the subject of a Bloomberg Big Take, which of course everyone can access by going on the terminal or to Bloomberg.com. But I guess the way to start our conversation here is, why does the bond market seem to only kind of focus on one big thing at a time? Right now, it's the timing of a rate cut whenever it does come. But not so long ago, in November, for instance, before November, it was this idea of an onslaught of debt supply.
Well, it takes into account all of these things all of the time, and I think that the focus of the market, though, is really the pace of the economy and the path of interest rates, particularly the Federal Reserve's path. So the way that we look at this and the way that we publish this at Bloomberg Intelligence is looking at what level the rate should be, right? Where should the 10-year yield be, given the level of debt and the amount of easing by the central bank, as well as where the economy is. So it's not that the market focuses just on one thing, but it's really that monetary policy overall really affects the day-to-day movements of the Treasury bond market. And you get these events like the quarterly refunding announcement that we're going to get in early February that can, shock the market over a short period of time.
There's always a big drumbeat to that, and there was concern here when we got the announcements last year that clearly showed that uptick in new issuance here. But the market seemed to have adjusted to that relatively decently. We had a couple of sloppy auctions, I think, towards the tail end of the year. But overall, there was nothing that really would cause, I think, anyone concern.
Yeah, and we even had a 10-year auction today that actually went reasonably well. It came very close to what the market was expecting right at 1 o'clock. Demand ticked up a little bit in terms of end user demand, so investors bought a little bit more this month than they did in December. So I agree very much with that, Romaine, is that the market, when the market wants bonds, right? So when the market thinks that the Fed's going to be cutting and that the economy is going to be slowing down, people still will demand more bonds. And that's what you've seen in auctions such as today. Now, tomorrow's auction, the Thursday's auction of 30-year debt, could actually be a much more telling than today's, because keep in mind, 30-year debt moves a lot more. For a 1% move, a 30-year bond will move 18% in terms of price, right? So if people really like bonds, if people really think that the Fed's going to be cutting interest rates 200, 300 basis points, then 30-year debt going from 4% to 3%, you could have equity-like returns there. At the same time, just the opposite can happen, like you saw in the third quarter of last year when interest rates went from 4% to 5%. You lost 18% in price terms for owning 30-year debt. So I think tomorrow's market will really show, is there proper demand by investors for long-term debt?
Well said. Ira Jersey, thank you so much. Ira Jersey of Bloomberg Intelligence. We're going to stick with the fixed income world and turn now to the muni market, because here with us on set with more on what investors should keep in mind is Alex Patron. She is Director of Fixed Income at Rockefeller Asset Management. Alex, we were talking with Ira about supply and the onslaught of supply, at least for U.S. Treasuries. What does the supply picture look like for munis in the short term versus the long term?
Yeah, absolutely. Critically important question, Scarlett, because when we look at supply dynamics thus far, it really is kind of a key factor that we look to as portfolio managers in terms of when we think munis might outperform or underperform treasuries. What we saw over the course of the last several years is municipal supply has been quite light. What we're hoping for in 2024 is that municipalities will step in and issue more debt. We anticipate that you start to see a move towards 400 to 450 billion over the course of this year. Now, what we're looking for typically is when that supply comes to market. This week has been one of those weeks where supply starts to increase materially. Those are the moments where we look to some of the seasonality of the municipal market, and those are opportunities for us as investors to say, are we cheapening a bit versus the broader market? Municipalities have been quite prudent up to this point and aren't issuing as much as we've seen in the past, and we think it's at the point in time where they need to step back in, and we'll see that.
So I'm wondering how you factor in headlines that do come out on municipalities. For instance, California Governor Gavin Newsom is proposing spending cuts next fiscal year to reduce the deficit to just under $38 billion. The previous projection was $68 billion, so that's quite a big change. What does that mean? How do you factor that in? How do you think about what that means for supply when it comes to California debt?
Absolutely. It's not just supply, but it's also looking at the technical factors. So whether spreads widen on some of these headlines, yes, budgetary shortfalls should be expected as we move forward. This has been a period in the last several years where when we take a step back and we look at credit fundamentals in the municipal market, we look at a couple of key things. Number one, upgrade to downgrade ratios more broadly. What we've seen over the last several years is that upgrades have far surpassed downgrades across the municipal market. 80% ratio when you look at tax-backed sectors, so think state and local government debt, 70% ratio when we looked at revenue-backed bonds. The next thing we look to, of course, are these periods where we enter into a bit of a slowdown. Now, the Fed is telling us we believe that the economy is slowing, right? They're saying that we can back off a little bit from here. So it shouldn't be a surprise that tax receipts are declining and some of these budgetary shortfalls exist. What we're looking towards is what are the responses to that? You mentioned Gavin Newsom. I think we also have all seen many of the notes that they will tap into reserve funds as needed, potentially raise taxes. The wealth tax, of course, is being talked about right now. So there's a lot of fiscal flexibility here, and that's really important. Now, what we're looking towards is not just the issuance that then is required, although municipal issuance is usually for the use of some type of project finance, but I think importantly, if some of this noise around headline risk turns into negative watches by credit agencies or just discomfort from the general public and spreads widen in storied credits, we actually view that as an opportunity to potentially add.
Well, let's talk about that, because we were supposed to get that spread widening last year in 2023, and we didn't really get it. I mean, I know they widened a bit, but that was like minuscule. Here, what's the widening that you look to where it starts to become attractive?
Well, make no mistake, 2023 was a year of a lot of volatility within the municipal market. That volatility was really driven by two key factors. Factor number one, the tremendous amount of volatility that we saw in U.S. rates. And munis will always move along with. In periods in which we see supply elevated in the municipal space, and it's not just new issue supply, but it's also looking at secondary selling pressures. You had a period in 2022, tremendous outflows, 2023, a little bit better in terms of fund flows. And so you did have periods in which spreads might widen in certain sectors, in certain credits, in certain structures. As those things were happening for us, we love that in high quality credits because it creates opportunities to invest and add. Now, spreads have tightened. Ratios have become much richer over the last couple of weeks. That's driven by a little bit more stability that we got out of the rates market coming out of November and December.
But the economic picture is still there, and if you broaden it out from just munis and you look at the broader credit landscape, fixed income landscape, there's been a lot of chatter about whether we're headed towards some sort of credit down cycle, if you will, here. And we had some downgrades on some companies today, primarily because of that over at BMO. I'm wondering if that is a concern for you right now.
It's always, credit trajectory matters. So where we are at in the macroeconomic cycle is going to impact companies. It's going to impact municipalities. That other key factor for the municipal market is looking not just at downgrades, but defaults. Defaults are a really key indicator. I think investors historically have been terrified of municipal credit relative to corporates. When you look at default statistics on both an absolute and relative basis, they are quite low, both in the near term and over the long term. Defaults in the muni space, 1% last year. Does that tick up a little bit over the course of the next year? Yes, I think so. That seems realistic. When you look over a longer term time horizon, 30 plus years, in the investment grade universe, that default rate has been about 0.4%.
All right, Alex, illuminating conversation. Alex Petrone there, who directs the fixed income business over at Rockefeller Asset Management. Stick with us here on The Close. A conversation coming up next about some of the big corporate layoffs, the newest coming out of Amazon, and a business that they just acquired. That's coming up next after the break. This is Bloomberg. We've learned that Amazon is laying off hundreds of employees in its Prime Video and Studios units. That comes at the same time that Twitch, Amazon's live streaming site, is cutting 35% of its staff. Matt Day joining us right now, Bloomberg reporter out there in Seattle, to help us understand exactly what's taking place here. I know some of these numbers may look large on a percentage basis, but in terms on an absolute basis here, how many folks are we talking about?
Well, hundreds is about all we know. It's about 500 at Twitch. The czar of Amazon Studios business told us hundreds as well. That's not anywhere near as severe as the cutting Amazon did early last year and the prior fall, where they axed about 27,000 corporate jobs, but just more of a drip of cuts across Amazon's businesses going into the new year.
I am curious about the studios business, that obviously is wedded to MGM and that acquisition that they just made back in 2021. Is this just kind of trimming around the edges here, or is this kind of a material rethink here of what they bought?
No, it's not clear that this is directly related to all the stuff that they acquired with MGM, though, as would make a whole lot of sense. There's a lot of duplication across Amazon's video business. They've got think it's 3+ streaming services with the core Prime Video app, with MGM Plus, with Freevee, their rebranded IMDb TV, kind of free streaming options.
Hey, Matt,
So
I have to interrupt you for 1 second here in conversation with Matt Day. We want to pivot from that back to Bitcoin. We have now learned here that the SEC has approved Bitcoin ETF proposals on an accelerated basis. That's the red headline crossing the Bloomberg terminal right now. We are still fishing around here, Scarlett, for some more details about this, but our Bloomberg reporters have confirmed that the SEC here in the United States has approved Bitcoin ETF proposals, plural, on an accelerated basis.
Right. They were only really required to address one of them, which was the ETF brought on by ARK and 21. But of course, with this announcement, we're understanding, or we believe, that this would likely be a slew of them because the SEC doesn't want to be in a position where it's picking favorites. It's giving the go-ahead to one ETF, but not to the others, which would give that first ETF an advantage. And again, we have confirmed that this is the SEC doing it this time.
All right, let's get right down to Washington. Kayleigh Lyons, the co-host of Balance of Power, standing by right now. Kayleigh, let's try this one more time. What do we know? What's happening?
Well, we know that approval actually has happened this time around. This is approval of 2 necessary filings that were necessary for these products to actually do what they intended to do. One being the 19B4 filings, that is the exchanges that will list these products. The others, the S1s. Many revisions that we have seen in recent days were to those S1 filings that also had to be approved by the SEC. So that is what we know at this point. Of course, this was a highly anticipated decision. Despite the events of yesterday, the confusion around whether or not approval had happened at that point, it turned out it did not, but it is indeed happening now. These spot Bitcoin products for the first time in ETF form being approved here in the U.S. All 11 of them remain.
I'm going to just jump in here and bring in Shonali Basak, who is, of course, covering crypto as well. Shonali, what have you been hearing from the folks you've been talking to?
Yeah, it's interesting because we've had the initial approvals and we have some big issuers already coming out with statements. For example, Grayscale, one of the biggest ones, had said that they're happy to confirm that the Grayscale team has received the necessary regulatory approvals to list GBTC to the NYSE ARCA and will share a press release shortly. We expect these firms to start trading their ETFs tomorrow. So tomorrow will be a large day for these issuers.
All right, we are getting that confirmation crossing the terminal. The Grayscale Bitcoin Trust has been approved. Here are a few others that have also been approved. The Bitwise Bitcoin ETF has been approved. The hashtag Bitcoin ETF has also been approved. Proposals from iShares Bitcoin Trust has also been approved, and the Valkyrie Bitcoin Fund has also been approved. We can keep going through these. They're going to keep trickling in here. Van Eck, Invesco. So we're starting to get the confirmation here of all the individual ones, Shonali, about the ones that are approved. Not much of a surprise, right? I mean, we expected this to happen, and the names that we're seeing here right now are the ones that are going to be first out the gate.
All 11. And so remember, the first mover advantage is very important when it comes to the ETF world. When this happened in futures, you saw many assets flow to the first one out the gate. Now, tomorrow, what's going to be interesting is that war on fees. And remember, the reason we talk about GBTC is they have that $30 billion fund. What happens to those assets? Do they stay stable? Do they go down? Do they move up? The choices people make from here in terms of where to go for their Bitcoin exposure will be fascinating. But certainly, let's just take a moment here. What a historic moment for the Bitcoin industry to have this approval after so many years. It was a tough 24 hours. You and I have been sitting here, and even when we first watched the first set of filings go up, there were a lot of questions about, how the SEC was going to do this. A lot of people couldn't access the filings right after it initially was posted. It was posted and then came down. Certainly confusing 24 hours and even last half an hour, but we're here.
We're here, and we have the headlines. They're crossing the Bloomberg terminal. Kayleigh Lyons, this looks like, a lot more organized this time around with all the individual headlines on the different ETFs that were filed with the SEC. What do we know about how else the SEC is going to communicate with investors about this?
Well, they very clearly have everything laid out in this filing, Romaine, and Scarlett, that is available on the SEC website right now. I wouldn't be surprised to see further statement out from the SEC in the form of potentially a press release or something from the chair, Gary Gensler himself, just given how sensitive the communication around this now is, especially so because of the events of yesterday, making it very clear what information can be trusted and what cannot be. Also knowing that this is going to raise a lot of questions that regulators may now be having to answer the idea that now that they approved this spot product in particular, now both Bitcoin futures and Bitcoin spot ETFs will be trading. Does that mean that we could see the same for other tokens out there? Could we be seeing a spot Ether ETF, a spot XRP ETF, those kinds of questions? I'm digging through the language in the statement now to see if we have any indication of that answer.
Well, so I just want to go back to one of those questions, Kayla, because I'm also looking through this filing, the 22 pages of it. And let's get to some of the concerns that people had about the potential approval of this, which the SEC does address head on, saying that, quote, some commenters contend that the commission should disapprove the proposals because the Bitcoin market has been and is being and will likely continue to be manipulated. Now, they acknowledge that, yes, they agree with those concerns, or they acknowledge those concerns, I should say. But they said that pursuant basically to what the law and the regulations require, they had no choice but to actually grant approval of this, and that in the meantime, they will find some ways to mitigate some of the issues surrounding the ability to, quote, prevent fraudulent and manipulative acts and practices, Kaylee.
Yeah, that's exactly right. They say the commission considered this, and based on the analysis of data and information available to them, they find that sufficient other means of preventing fraud and manipulation have been demonstrated. They go on to talk about surveillance sharing agreements, which were a big question in this. They do note, however, that spot Bitcoin does not trade on the CME, that the CMA does not engage in surveillance of spot Bitcoin markets. So as with prior proposals, this does raise the question regarding the sufficiency of a surveillance sharing agreement with the CME. So these were kind of the questions that they were assessing what is and is not sufficient here. But to your point, Romain, especially given how we saw price fluctuations on the news yesterday that proved out not to be true, these manipulation questions very much are front and center in these markets. But remember, it was the SEC's argument that spot markets were more prone to manipulation than futures markets in the first place that a court struck down in the Grayscale case, which really is what paved the way to this, all of these different ETFs being approved here.
All right, I just want to jump in here also because SEC Chair Gensler, according to Bloomberg News reporting, based on the statement, says we did not approve or endorse Bitcoin. So it goes back to that idea that perhaps the SEC is doing this reluctantly, Shanali, approving these Bitcoin ETFs, even though they are aware of all the many, many risks involved.
Yeah, I'm reading through the SEC statement, and he is very, very clear. This is quite a long statement, and it said it should no way signal the Commission's willingness to approve listing standards for crypto asset securities. Remember, this is the big debate in the market. And he also makes clear that this is in regard to ETPs, in regard to one crypto asset that is Bitcoin in and of itself. And to your point, he says it also does not mean that they approve or endorse Bitcoin. Interestingly, we have to talk about the price movement here in Bitcoin. The huge run-up we've seen in Bitcoin prices up till this moment, you are only seeing Bitcoin trade at $45,700 here or so. Remember, in the fake announcement yesterday, it ran up to $48,000 nearly. And so you have to wonder whether really a lot of these gains were priced in. Some of this will require looking at the flows we see into these ETFs. And again, those are up for debate. On one hand, you see Bloomberg Intelligence expecting that you could have a record ETF flow announcement tomorrow or in the following days from BlackRock, among others. But time will tell. And if we don't see that demand, then what's the floor for Bitcoin prices from here and what's the upside?
I do want to go back down to Kelly Lyons in Washington. And Kelly, I mean, looking through the statement by Gensler, and as Shanali just pointed out, I mean, the idea here that this is not an endorsement of Bitcoin in any way, shape, or form. And as Scarlett alluded to, maybe it's just because the law itself forced their hand. This gets to the question here as whether we should expect additional actions by whether it's the SEC or the CFTC to provide a little bit more clarity about the umbrella for regulation.
Well, that umbrella for regulation, Romain, frankly, is a matter that should be decided by Congress. It would take congressional legislation to actually divvy up authority between the regulators, the CFTC and the SEC. To this point, the SEC maintains that most of these tokens, Bitcoin aside, are indeed securities, and that existing securities law, therefore, applies to them. Their primary mechanism of actually applying that has been enforcement action, essentially taking these ideas to the courts. Now, that said, the courts have ruled against them in some ways, like in the XRP case. They decided that court ruled that it was not a security when it issued to different kinds of investors. So there was a bit of nuance in that decision. But it just kind of speaks to this idea, Romain, that as of now, there is no real regulatory framework in place for crypto assets broadly. So the SEC has essentially leeway to continue regulating via enforcement action and just trying to get people in compliance with existing law until there is new law out there.
All right, so there's a lot of moving parts here. And once again, the headline is the SEC has approved Bitcoin spot ETFs, all 11 of them, in this milestone for digital assets. This comes after 10 years of the industry pushing for some kind of approval of this Bitcoin ETF. Shonali Basak and Kaylee Lines here with us. Shonali, let's talk a little bit more about Greystone, because Greystone was really, Grayscale, excuse me. The different gray companies getting all mixed up in my head right now. Grayscale, GBTC, was a Bitcoin trust. And of course, it wanted to convert to an ETF. In doing so, it's got a pretty high fee, 1.5%. What is the company saying about that? Because it has to compete with, say, BlackRock or Bitwise, which has a 20 basis point fee.
Yeah, Grayscale and Valkyrie are similar in their responses into why they are keeping higher fees than the rest, which is that we have a track record here in doing this. We know crypto, we understand crypto, and it's why so many people have come to us for crypto in the past. Grayscale, in particular, is the biggest of them all. When it comes to Bitcoin, it is a complicated market. It is not going out and buying a bar of gold and hoping it stays there. It is making sure that the custody is well accounted for. It's making sure that you don't lose those keys at the end of the day. All of the, you were talking about risks, Romaine, all of these filers have had significant risks tied to the volatility of Bitcoin, particularly the potential for it to go to zero or to lose things like the keys or to lose the assets in particular. It is not the same as other underlying assets we see in ETF form. So that is what these issuers are banking on, the knowledge of Bitcoin.
The knowledge of Bitcoin. All right, we are right now in conversation with Shonali Basak, our Wall Street beat reporter. Kaylee Lines down in Washington, sticking with us as we parse through the latest news, the approval here of those 11 spot Bitcoin ETF applications. We do want to go out now to Kristen Smith. She's the Chief Executive Officer over at the Blockchain Association. And Kristen, I mean, this was widely anticipated here, given the tenor and tone of the statement by Gensler, as well as the actual filing itself, which sort of went through a litany of potential risk out there for investors here. Do you think that this is the end of the story?
No, I mean, I think certainly this is a watershed moment. It's one that the industry has been anticipating and waiting for nearly 10 years now. It's been an incredibly long journey. And I think the SEC has not historically been a fan of Bitcoin or digital assets. That became clear in their statement. But I think this is a case where actions speak louder than words, because now we will have so many more Americans that will be able to access Bitcoin, to get exposure to Bitcoin through traditional means that they usually do for investing. And I think it's a really important moment that will be incredibly important in the history of Bitcoin as it continues to unfold.
Yeah, no matter what shakes out over the next few years or so here, this is certainly a milestone occasion. I am curious, Kristen, about the adoption of an ETF product, of an exchange-traded product, and whether that carries with it less risk than what investors would face if they just went out and tried to actually buy some of these crypto assets, Bitcoin specifically, out there on the open market themselves.
Yeah, well, as Shonali was just saying, the custody of crypto is complicated. And I think one of the great features is that you can self-custody Bitcoin and you can transact directly with someone using Bitcoin. But that's not for everybody. And so this will open up to an entirely new marketplace, an opportunity to be a part of this asset and to have some exposure as part of a balanced portfolio. So we're incredibly excited about the moment. I think, from a political point of view, too, this means that we're going to have, we already have about 50 million Americans that own crypto. We're probably going to have another 50 million more Americans that are going to own crypto as a result of this. And so I think from a political perspective, we're incredibly excited, because I think it means that policymakers and regulators have to take this seriously. We have to work on finishing regulations for other digital assets. But this is really an opportunity for so many more Americans to learn about Bitcoin, to be a part of Bitcoin. And it's certainly a moment that all of us in the industry are celebrating today.
Right. And again, this is for approval of spot Bitcoin ETF, but there have been Bitcoin futures ETFs already around since late 2021, BITO being among them. What do you think is the demand for something like a Bitcoin futures ETF now that a spot Bitcoin ETF is available? Is that something that creates any kind of competition?
Yeah, well, I don't think that the Bitcoin futures ETF is the same as a spot ETF. Futures are very complicated. You got backwardation in contango and all of these aspects that are not the same as having more direct exposure. And so this is, I think, is the product that a lot of institutions have been waiting for. And I think, when the assets start trading tomorrow, we're going to see, a lot of people for the first time say, hey, I want to be a part of Bitcoin. I want to have a little bit of that in my portfolio. And we're really excited that this moment's finally arrived.
Shonali, I want to throw a question to you now with regards to the Grayscale GBTC, which will now be an ETF. What is Grayscale saying about who their new target audience is, who their new target user is?
You know what's amazing about that? One is more retail investors, right? People who can now go to their financial advisor and say, hey, give me some Bitcoin, because they're not going to buy it on an exchange. And remember, when we're thinking about custody, you have to think about how wrong things have gone in Bitcoin in the last year. If you kept your money at an exchange like FTX, you might not have gotten it back. That is why the ETF form, you're essentially trusting a Grayscale or a BlackRock to hold that for you and make those decisions, and you hold an equity claim to it. But also remember, something to watch tomorrow, these questions will start pouring in. First, is Grayscale and the other crypto-focused issuers going to start looking at other crypto assets? Ethereum, Valkyrie had said people are looking at Ripple ETFs already, for example. And two, you have to understand Coinbase is a custodian for a lot of these assets. Can Coinbase make enough money from being a bigger custodian and losing some fees tied to regular way trading is another big question. How do business models around crypto change if you can buy a bunch of it via ETF forms?
Yeah, I am curious about that. Kristen, I do want to kind of pose part of that question back to you here, specifically when we do talk about a sort of, if not new players, certainly more traditional finance players that now are going to gravitate to this space, given that the legitimacy of this decision bestowed upon at least Bitcoin.
Yeah, no, listen, I think that the pie is growing, right? Like, this isn't a situation where customers on Coinbase are suddenly going to drop their Bitcoin and move over to their brokerage. I think this is going to be new individuals, new investors that are going to be coming in and utilizing these new products. And I think that, I think it's going to be very exciting. I think that this also paves the way for other crypto assets to eventually get ETFs themselves. And so it's a really important moment, and it's one that I think makes Bitcoin stronger. It gives, more choices and more options for new people to come in. And it's, it's something that, is, I think, long overdue.
Absolutely. And I mean, this is going to be good for at least those who are sort of faithful to this part of our financial markets. I mean, but you're down there in Washington for a reason. There is still a lot of going on, whether it's what's coming out of the regulatory agencies, what could potentially come out of Congress, at least if folks like Elizabeth Warren and others get their way here. What is the advice now that you sort of give some of these companies here as to the next steps, and more importantly, some of the potential, let's say, call them speed bumps they might face in the weeks and years ahead?
Yeah, well, I think we've had some really productive conversations in Congress over the past couple of years. We saw legislation move through the House committee last summer, and I think that legislation still has potential to get done before the end of Congress. But, there are some gaps in the laws. Crypto is not entirely unregulated. There's a lot of state-level regulation, and there's federal regulation around illicit finance. But we do need Congress to step in and fill some of the gaps around stablecoins and market structure. And so I think that this only strengthens the case. I mean, I think it's very clear, even for policymakers who maybe just thought this would go away, that this is not going away, that this is something that's here, and it's something we have to take seriously. And what we don't want is more of what got us here today. I mean, we wouldn't be here if Grayscale hadn't decided to challenge the SEC's decision on this front. And we shouldn't have to go through these legal proceedings in order to get both sort of procedural and policy decisions made. And so I think crypto has not been given a fair shake in DC. That is something that I think is starting to change. And I think a Bitcoin ETF is going to help urge good policy to move forward and not go the other direction.
Well, it's all part of the long and winding road to these spot Bitcoin ETFs. Part of that long and winding road as well was the FTX bankruptcy, and it's something that Shonali mentioned. Kristen, I'm wondering whether the FTX bankruptcy estate will, if you have any thoughts on or have heard anything about whether the FTX bankruptcy estate will begin redeeming their GBTC trust or units, or perhaps sell it now that the ETF conversion can happen.
Yeah, no, that's an interesting question. I haven't heard anything specifically on that front, but no, the discount that GBTC formerly had, I think, is gone now. And so, yeah, I think that's going to be an interesting question as they continue to work through the bankruptcy.
So you lead the crypto industry's development of a strategic roadmap for public policy. How are you helping policymakers understand the distinctions between these different spot Bitcoin ETFs and, when they eventually come along, other crypto ETFs?
Yeah, no, I think it's working with Congress is interesting. You have some members that are very interested, have intense curiosity about this space, and have taken time to learn the nuances between the different assets. You have other members of Congress that have had less interest, and those are the ones that are a little bit challenging to get to. But, I think when we have a decision like this, when we have Bitcoin in the headlines, when we see that there is a regulated option for getting exposure to Bitcoin, I think that helps us have a broader conversation with some of these folks. And, this is something that is, a complicated space, but is very important. And I think it's the future of financial services. I think it's the future of the way that we interact on the internet, and that this is something that they're going to need to get to know and to be a part of.
In conversation with Kristen Smith, Chief Executive Officer over at the Blockchain Association. We do want to keep this conversation going and bring in William Quigley. He is the co-founder of Wax and Tether. Joins us right now to talk about the decision, the long-anticipated decision, as I'm sure you know, Bill, of the approval of the spot Bitcoin ETFs. We get 11 of them. A lot of people looking to the upside to see that price, potential price increase as more people gravitate to an easier way to buy these assets. It's also an easier way to short these assets if it works like a regular ETF.
I would agree with that. I mean, crypto people tend to always focus on the positive, which today we should, because it is a big deal for the traditional financial markets to now have a vehicle to acquire Bitcoin. So that's excellent. But you're right, with as much demand, and I think this will be new demand, because people who want to hold Bitcoin themselves, they would probably not be attracted to an ETF, because you can actually do things with your Bitcoin. You can lend it, you can borrow against it, you can use it functionally for peer-to-peer payments. So it has a utility. They're probably not the ones who are going to go after the ETFs. It will be people who maybe have wanted it but didn't have a vehicle to acquire it. And the downside, of course, of a massive new group of buyers being able to hold Bitcoin is that they can also sell very easily. And that we will see how that affects the volatility of the asset. We really won't know, probably for 6 months to a year.
Well, I mean, it's kind of an old school, traditional finance market guy here. That almost actually seems more beneficial. Wouldn't, by having sort of the ability to do both, meaning to either speculate to the upside or to the downside, doesn't that create maybe a level of transparency, or at least a more efficient way of price discovery?
You may be right about that, but this is the thing about crypto people. A lot of them buy it because they think about it as a principally long-only asset. And as you know, if you can't short something, there's just strong bias to the upside. By allowing people to be able to short it, and it's a little premature to say they can, even after ETF is launched, the shorting costs will be, I assume the borrowing costs will be very high. It may be 2 or 3 months before that's really possible to do. But it is it's an obvious evolution of the ETFs. I assume, as your earlier guests have suggested, there will be other products. Wall Street loves new products. That
might have been the understatement of the year, William, and we're only 2 weeks in.
Yeah. And as it works, or hopefully does work, in my mind, if we hit 20 billion in 6 months of assets among these various ETFs, that'd be a positive outcome. Some financial institutions last week and before were suggesting 50 billion of demand, 100 billion of demand. Were that to happen, the price of Bitcoin could go nowhere but very high, very fast, because the vast majority of Bitcoin is not traded. It's held long-term in cold storage. There are only 1.8 million Bitcoin that are actually globally traded on exchanges. $100 billion worth of Bitcoin would be 2.1 million Bitcoin. It would literally be more than all the Bitcoin traded globally on exchanges.
Wow.
So there will certainly, if there's that level of demand, first, it'll be hard to acquire it, and you'll have to pay up to do it. So this does have a lot of positive elements for the price of Bitcoin rising ahead of the Bitcoin halving, where it usually rises after that anyway. So two positive catalysts.
Yeah, and it's interesting, given that we got the announcement, the formal announcement, that Bitcoin's price has continued to stay higher. I mean, it's not going off to the races or anything, but there was this expectation that perhaps it would be a sell the news kind of event once the headline did cross. What does that say to you, William, about how the price action will look until we get to that halving later on?
Part of this has to do, and you're right, but by the way, I've long since given up in trying to understand how crypto actually moves on a day-to-day basis. Usually it's, buy on the news, sell on the news, and then the event is a non-event. Crypto, sometimes the event actually drives the price up or down as well. But what I don't know is how many of these ETFs have been seeded already with BTC, with Bitcoin. My instincts were they wouldn't be seeded because that's a substantial risk. At what price would they be buying it? And so it takes some time to acquire that Bitcoin. I'm actually a little confused on the mechanics of this part. From where do they source it? If they source it off of exchanges, if the SEC said you must source it off exchanges, that would be a very bullish event. I don't know how they're doing it, but if you could, a lot of large players do not use exchanges. And so you don't buy, you don't exert that buying pressure.
Bill, another question for you here, because some of these issuers had put the stablecoin market and the fragility of it in their risk factors. And we have seen stablecoins, including Tether, recently depeg momentarily. Do you worry about how interconnected these markets are and issues in one market impacting another?
By the way, first, I over the last 6 months, I thought there were 3 or 4 substantial risks to the crypto ecosystem. Number 1 or 2 was something from a regulatory standpoint, reducing the ability of people to use stablecoins. That risk looks now like it's not a factor. But stablecoins are the principal way people trade crypto, at least outside of ETFs. Virtually every crypto that's traded, the number 1 trading pair is that crypto against usually Tether. So stablecoins are the circulatory system for crypto trading, and without them, volume would be 25% of what it is. So stablecoins are certainly important. One clarification I would make, by the way, about the way you described Tether. Tether is not pegged to $1. Tether is redeemable for $1. There isn't a mechanism for pegging it to $1. It doesn't move off or on the peg. It's simply redeemable for $1, and which is a pretty simple concept. And as a result, generally it trades very close to $1.
As we wrap up our conversation here this evening, Bill, I'm just curious if what you think will happen tomorrow when trading does begin in these 11 Bitcoin ETFs, spot Bitcoin ETFs, when they launch.
A tall order. I will say this. If they have to acquire the Bitcoin for their ETFs, if they don't have an inventory already, there's going to be buying pressure. A very small amount of fiat, a very small amount of dollar buying pressure on Bitcoin or any crypto causes it to rise substantially. So if all of them are out in the market on exchanges acquiring Bitcoin, the price would go up a lot. But one of the questions I have is each institution, each financial institution with clients has to ask, what is the suitability for this ETF, the Bitcoin ETF, in our clients' accounts? I suspect the discretionary accounts managed by institutions won't acquire it, but self-managed, if you're on Schwab or E-Trade or Robinhood, perhaps, they'll let people buy it. But suitability is an issue. And so I think that's not yet percolated through the system as to who is going to buy it and who's going to be allowed to buy it.
In conversation right now with William Quigley, he's the co-founder of Wax and Tether. We do want to go back down to Washington, where Kristen Smith is still with us, who is CEO over at the Blockchain Association. And Kristen, we only got a couple minutes left, and I am curious about something that Bill was just kind of getting at too, which is about kind of the fiduciary duty that investment advisors and others are going to have to really sort of explain the potential risk for all those folks that might actually be knocking on their door over the next few days and weeks to get a piece of these ETFs.
Yeah, no, I think there's going to be a lot of education going on with financial advisors as they get to better understand this. And I think it's, this isn't something that everybody's going to come to market and purchase these tomorrow. I think this is something that we're going to see over the next several months. Now that the products are going to be available, different, I think, firms are going to add them into their platform at different times. And so this is not just kind of a one-day event tomorrow. I think this is going to be an education process that happens with investors and advisors over the months, potentially up to a year ahead. And so I think it'll take some time.
All right, our thanks there to Kristen Smith, the Chief Executive over at the Blockchain Association, as well as William Quigley, co-founder of Wax and Tether, here on a really phenomenal day. Shonali, you're still with us here as we close out the show here, and we might as well just talk about this. I mean, there's going to be a lot of hand-wringing over the risk and baked into this, but this is really a huge milestone just in the development of financial markets.
It is absolutely a milestone. To your point, you've been waiting a decade for a moment like this. Bitcoin has appreciated meaningfully, and a lot of people at least know in concept what it is if they don't know what it does. And I do want to end on this note too. Chaos tomorrow, higher in 3 months. That is something from a whale, Mike Novogratz.
Yeah.
Chaos.
All right, I think we're going to have a lot to talk about tomorrow and in the weeks to come. Our thanks to Shonali Bassick on behalf of myself and Scarlett Fu. Thank you for joining us. This is Bloomberg.